Anything you want, just put smile. You deserve, baby, you deserve all. And I'm gonna give it to you. All right, let's get to this money now. I was vibing this morning, chat. I was vibing this morning. um, I was definitely vibing it this morning. But it's my segments. I mean, I wouldn't say it's gonna be on the super shorter end because I'm kicking it off at 8:30. But y'all gotta give me a second to get set up here because I'm still getting a few things set up over here. Um, Jim is gonna come in after me, talk stocks with y'all around 9:15 ish. Um, after that, Eric's gonna come in. Well, Jeffrey or Eric, one of them is next after that. It's been a lot. It's been a long weekend. Let me go make sure that I'm. Okay, so yeah, after Jim, Eric's gonna hop on, and then after Eric, Jeffrey's gonna come in and give us the opening kind of news breakdown, business news breakdown. Like he touches financial markets, but he's definitely more tailored to our business, more business centric audience than our trader centric audience. But that's because we try to support both traders, investors, and entrepreneurs in understanding the markets, what they're doing, how they're doing it, and how the politics around them are kind of moving things. Um, let me send this out. Let me send this out to the chats so folks can hop on. Cause I'm on the early session. I'm usually not on the early session. I'm usually on. I usually hop on. I usually hop on after gym for the later morning session. But I've just had to say screw it and just you know what I'm saying. Just do what I gotta do. Um, we live chat. Everybody need to get into the chat. Da do that, do that. Pull up, pull up. I'm probably going live for the VIP chat on Zoom later this evening for like agent session or something. Um, get tapped in. We're live. We live, baby. Where's my other phone at? I got, bro. Y'all look at this stupid stuff right here. I have three actual phones. Because I have like freaking three subsidiaries, and it's actually best to just separate all the different conversations and apps and and bank logins and all of that stuff. So yeah. um I haven't moved Discord over to either of these two phones. It's still on my original phone. um I've just gotten new phones over the past year, honestly. One like 6 months ago, and then I just got this one like a few weeks ago. Sorry, let me get this sent out, and then we gonna get into it. We're gonna get into it. Y'all can get some trades in. Maybe I'm not gonna, absolutely promise that you're going to be able to trade. But I mean, it's a good morning. We got a pretty deep grab on Bitcoin. We're looking at some Bitcoin buys soon. Um, Most definitely. Happy Black History Month, everybody. On the second day of Black Academy. No, let's not make it ratchet. Okay. Let's first take a look at hold on. Let me refresh this because I think it might, yeah. Okay, it's gonna let me just switch over. I don't know why it was being stupid when I was recording the weekly breakdown yesterday. But you guys can see my screen. Um NZDCHF, the one that we were, you know what I'm saying, kind of looking at the hardest, isn't as bullish on, at least on here. AD Chef still relatively the same. NZD JPY, I still don't like, selling the JPY right now. Personally, just doesn't feel nice, knowing the BLJ could intervene at any moment. So I'd rather just have my stuff in you know less risky change all of a sudden kind of assets and trades and whatnot. um US 10-year treasury yield is getting more bearish. um Nasdaq has a slightly, it says neutral, but that's kind of bearish for Nasdaq. Dow has a bearish read though. SPX also bearish. And DAX bearish. Okay, so and even platinum with a bearish read. It's a tedious week. It's gonna be a tedious week. So I'd advise everybody to be very, 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 very safe. But let's go back over here to this chart. Hey, baby. He's shuffling. Yep. So this is the area that I wanted. I was like, yeah, she grabs this. I might start scaling in a little bit. You know what I'm saying? So, I am gonna start scaling in a little bit. Probably towards the end of today. We'll see how the session opens. It's not oversold. It could buy off of here pretty easily. Um, Buying volume. Yeah, people like this level. People like this level. Um, like 74 is not like set. I remember, if you guys remember, anytime I've gone, and actually like showed you this area, it's always been 72 to 74K, not 74 to 76, 74 to 77. So I want to break this low one more time before I start scaling in. Not gonna lie to you, I want to break this low because I want to either get like just a bit under 74K or just like right at 74K. You know what I mean? It's like we really like matched this low almost perfectly there, didn't we? But we didn't break it. We didn't break that low. So yeah. Let's get one more. Let's get one more break lower. Uno más, and it's fine. One more break lower, and I like that. I will say though, um, I do want to see XAG. Um, Man, that's an opportunity, isn't it? Look at silver. Um, it's risky to get in here, right? Because of that kind of drop. When you get that kind of drop, bruh, in precious metals, it's like I was looking for this area. So, mm, but I'm not perfect, you know? It really, I mean, it did a very similar thing to what we just looked at on Bitcoin, just kind of on different fractals. mm, I'd love to see this area get tested again, right? Because like the risk to reward down here is just this, you know what I'm saying? Um, it is shaping up to look like a low key retail reverse head and shoulders, but those can get wiped out pretty easily. Sorry, my bot is over here trading and it caught my attention. It just made like $20 on a little silver trade, actually. But I'd say, I mean, it's not the most dangerous thing in the world. Starting to scale in here, because if this level, honestly, I'd like for this level to hold first, right? Maybe we get a little bit of wickage down here. Excuse me, Trump. Get the line. All right, so yeah, I'm cool with all of this, really. Um, my stop loss like right below that structure, because I want to take this move higher, but I don't want to like, you know, catch a falling knife. You know what I mean? So, um, see if we can trickle down a little bit, build up a little bit of a base, and buy up. But it's mad volatile, so we're more likely to get like a snap, just a snap higher, off of a quick push down. Much more likely. So I'm gonna set a alert here. So when that low gets broken, I'll get notified. Come take a look at the chart. Real simple, real easy. Like, oh man, what happened to my camera? Okay, I fixed it. I fixed the chat. Sorry. Okay. Um, DXY here. All right. So we've already cleared this first initial level, right? Um, essentially, it seems like we are going to go push towards this here. Um, but that's not. I mean, that's not guaranteed. This could have been the wipe of liquidity that it needed right here, because of the fact that we were diverging here. This is only the 30 minute though, so um, but this gap being closed, I'm starting to like the sound of this. Starting to like the sound of this real good. Um, just break that low one more time, one more time for me, and I'll be in there. Stop loss just under this structure here, just a wee bit under the structure here. Give it a little bit of breathing room, um, but of course not too much. This is only what, like 80 pips, 80 pips roughly, which is a little more than I usually give forex pairs. I usually give forex pairs like under 50, but we're shooting for the stars here, so it's all good. We got this beautiful run up last week that I think we can go test again. But that will also depend on. Let me make sure that I'm on the right tab over here. All right, okay, so nothing today, but tomorrow, I think these are what's going to help push us into profit. Hmm. I wouldn't necessarily call this news trading per se. I would call this just just trading off the fundamentals, just a lot more direct this time. Um, so I'm looking for today, like during the trading session for hello to get broken. You're getting another entry over there, aren't you? You're crazy. My bot's over there trading this behind off. Um, USDJPY. I like USDJPY sells. Shoot, I like scaling in to sells from current levels. If I'm being 100% honest with you all, but I'd like to fill this in some more. Definitely like to fill this in some more. I feel like 50% of that gap down, so I guess it doesn't really have to. But with me seeing the dollar possibly pushing higher, it's advantageous to wait. So, um, let me see here. Yeah, the risk to reward is just a little bit better, you know. Um, Gotta make it roughly 1 to 2 ish, almost 1 to 3. Um, dang, chat. I'm pretty sure I'm getting sick. I've been freaking coughing and sneezed like 3 times in a row earlier. Oh, no, I'm so extra tired. I got plenty of hours of sleep. Um, but it is what it is. We have about 20 minutes left. Yeah, I just let's check the bird's eye tool real quick. Okay, so neutral momentum. Yeah, so let's get another push higher. Let's wait for another push higher. Bird's eye tool will probably give us a bearish read. Um, After that, and then um, probably be looking to attack this. So I'm gonna set an alert on here too. Order filled. That thing is taking a bunch of trades over there, ain't you? Going crazy. All right. Let's see. Let's see. Let me check. What else we looking at? Let's take a look at AD Chef. It's not how I remember that looking. I mean, I remember being stopped out. Is this the right chart that I had up? I kind of stopped paying attention at the end of the week when I got stopped out. 'Cause I didn't do much on Friday, like at all. Hmm. Probably because I got stopped out. So I didn't set alerts for my getting stopped out in profit levels. But We streamed every day last week, so you guys kind of got the full picture on all this. But it lost a lot of strength fundamentally, so I'm not actually looking to get back in here. I want to see this kind of like right. This is all choppy. We can find way cleaner trades. Let me just go back, take a look. Let's take a look at NZD Chef. That's the one we were really more focused on last week. Um, when I pulled up AUD Chef a second ago, for some reason in my mind I thought it was gonna look like this, but I forgot. I wasn't in AUD Chef as much as I wanted to be last week, but because it's so choppy. It's hard to trade that when you're getting stopped out at break even. You know what I'm saying? Every few hours after it pushes into profit. But NZD Chef still looks strong here. We're starting to get pushing towards a breakout here. Um, if we can actually, like, if today we close above this area here, then I'm gonna scale into more buys. Um, Something looking like um, man, it's got such a spread on this volatility. Um, Something along the lines of this here. Let it play up into that. And I mean, like, I want to give this a little bit of room just because it did all this BS. I want to give this a little bit of room. I mean, like, even still, that's like under 50 pips. You know what I mean, I usually give NZD Chef like freaking 15. um, but yeah, I want to take that. I want to take this higher. Liquidity is moving well. It looks like Bitcoin is in an area where buyers may start stepping in. That means we're getting closer to more of a um, risk on market, and then folks are feeling themselves. Money's moving where there's a little bit more risk, but a little bit better return. So this here, I like this to close up this whole encase this whole area here. Um, and then we'll likely see sellers start coming in here, or buyers like myself taking profit, and this will start trickling down. We'll probably end up consolidated here, and if we start seeing like Bitcoin really move, start breaking out, then we'll see this do the same thing. Honestly, um, more likely than not. Now, granted, um, that could also be a slight correlation with gold for the next few weeks. I've been noticing it's been correlating with gold fairly well over the past 2-3 weeks. So I mean, I did a little bit of research. It's done that over the long term. It's not just right now, but I personally noticing it trading it in the markets over the last few weeks. Sorry, my voice sounds a little monotone this morning, y'all. I'd like to bring y'all as much excitement as possible, but I am under the weather. I'm most definitely under the weather today. um, I'm trying to give y'all a stronger closeout. So you guys have the NCD chef set up on the bearish side. EUR/AUD is giving us a more than a little bearish read. Let's take a look at what it looks like. I took a L on this specifically. Um, I mean, not in my actual account. It's just in how I thought it was gonna go. I didn't actually trade this because I forgot to set the alert to actually go and trade it. But if I would have traded it, and I would have definitely took a position at this area for sure, for sure. So I don't want to act like just because I didn't lose the money, it wasn't a loss. I definitely would have took this buy, but as you saw, it wasn't like super. It wasn't a whole lot of risk for it. It was like 70 pips. Not much on it. Um, but we're getting a bearish read, and rightfully so. It's melting. Um, yeah, I'd take sells on this. I mean, this is an easy target here. This is a very easy target here. Um, and then you have like an intermediary target here. Um, honestly, I'd like to see if I can catch a pullback on that daily wick that I made. You see what I'm saying? Um, like this is sort of a pullback in itself. Like it really did just like kind of yank back, kind of melted through, yank back to that level that it had stopped at before. Let me get rid of this, um, so you can see it kind of stopped, melted through, yank back. Yeah, that's pretty clean. That's pretty clean. I might go ahead and take a trade. See, sometimes we're just right place, right time. I am going to take a short position here on EUR. We'll be targeting these areas here. The risk reward is not it's not bad at all here. I like it. I like it like that. Brum, 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 brum. See, right in the last 10 minutes I'm on, we find a trade setup. Isn't that great? Um, okay, here. I'm taking this here. Um, Let me put my stop loss on here. Yeah, the same thing. Roughly on my broker. Um, any pullbacks, I'm gonna scale in a little bit deeper. Let me set my TP on here. Sometimes they just get smacked mad fast. 641. Alrighty done. Alrighty done there. Let's move this over here. We're in there. I'm in a wee bit of drawdown. I'm at break even. 2 cents of profit. Just technically drawdown because of how much the trade costs. Um, man, 1, 2, 3, 4 ish. Yeah, wave 5 here. Um, it getting up under this here is like major. Closing up under it is probably like the big factor that's sending it lower. Is the fact that it closed up under this major area of psychological support. Both of them just boom, boom. Yeah, sell it, sell it. Let it be sold. Um, make some moolahs here. I'm risking about $50 to make about 200 on one account, and then I'm risking about $500 to make roughly 2,000 on another account. That's why it's taking me so long. Gotta move the munions. Gotta move the moolahs. You know what I'm saying? All right. Jim is gonna be on here shortly. So I'm gonna go ahead and get closed out. um, and leave y'all with the fact that I love you. I want you to be kind to somebody today. And I will see y'all tomorrow morning. All right. Go grab some coffee. Get ready for the next segment because Jim will be on in roughly 10 minutes. Mm. Jim's gonna come in here confused, like, why is it counting down? Um, Before I go to, I'm letting y'all know I am scaling into this more. Like when we break this low, I'm adding to this position to this point because we want to capitalize off of this area here, right? While we're in profit and looking to push lower. Definitely gonna be looking to scale in deeper and deeper. Um, After this area, I probably won't take any more trades. It'll be just kind of trailing my stop losses. Um, Almost this is getting more primed. It's pushed a little bit higher since we looked at it, I believe. Yeah. Yep. All right. I'm gonna go ahead and get out of the way. So when Jim gets in here, he doesn't have to do a whole bunch of extra.
Check, check, check. Yeah, cool. Good, good. Let me get on here. Where am I going? Still good there? Hear me? Is that going? No, it's not moving. Okay. Okay, gotcha. Okay, guys, we're going to be starting in about 3 minutes, but kind of want to detail what's going on here. Might be going on here. Some actual craziness with things. I mean, is this the time that when everybody buys the dip, it does not work out? I don't know. I really don't know because I already see signs. I see Bitcoin up a little bit this morning. I mean, that gets my attention. But things in tech world are changing, and a couple the things on Friday that I saw made me realize how fast things can go down. What goes back to prior couple of days with Carvana. That was the Thursday thing, I think, and then no, actually that was a Wednesday thing because looking back at the end of the Thursday thing, I remember it went out at like 4:10, but then it came off some more. Now it's 397 this morning after coming off after being a 100-point range trader on Wednesday. And then we had the good earnings with SanDisk and WDC on Friday, and the sell-offs. I don't know if you guys were following, but I was able to catch a bunch of halfway decent trades on this downside here, and less so with Seagate. So there are plays available, but you got to be smart about it and careful about it, and willing to suck it up a bit sometimes P&L wise because they're not going to be instantaneous things. So that's where plan comes in, at least in my case, in like not overcommitting too soon and having more available as far as like what you think you're going to use for the total amount of the trade. So that's really important. We can look at SanDisk too, which was a Western Digital spinoff just last year. So moves there. We see that's actually coming back. SanDisk. Uh, the other names maybe a little bit too, but these guys are all going to be priced out wide. I'm going to be careful. I think we might be in tune for a sell-off, but depends on who jumps in and buys and will they drive things up. I got the silver thing in the back of my mind with that big move down, which is out of my league there because I haven't followed it in a long time. I'm not even following any silver stocks today or mining stocks just because I'm so out of touch with that. But it's something I notice in the market and makes me question stuff and wonder, what the heck is going on. We can't go up forever. I know that. And, even stocks where things try to be influenced, you get certain entities uh, picking and choosing, who they're going to invest in and stuff goes up. But they come off. So look at Intel actually coming off after it made huge gains, every single day it seemed like forever. And Micron coming off now. I really get there was an investment in Micron, but Micron been doing so many things well. But even Micron might actually not make a new high today. Watch it, it will. But we'll see. But we should get going now because we got about 15 minutes till market gets going. I can tell you it is still pretty damn cold here in Vermont, single digits, but warming up to the 20s. So I might be wearing shorts today. Actually, I might. We'll see. Uh, Sweatpants for now. But let's go through stocks that are in the news and kind of got me thinking this morning. Because first of all, we got Oracle trying to raise more capital to invest more in AI. All right. And Oracle was one of the first guys to get going here, and their September earnings and the announcement that they were making big investments in AI. Then they start to have credit issues. And the stock was as high as 345. And where's the stock now? 170. So it's halved. All right. Halved even on pre-market bounce here with their investment. So it's taken as good news, but so much is spent. I have so many companies spending so much. To what end are they going to make real bank here? All right. It takes me somewhat back to the dot-com thing, a little over 20 years ago, where some companies came out of it, some companies didn't come out of it. So just food for thought, and makes me wonder. Because on the same note, Nvidia, there's a delay in their big investment in OpenAI. So one's reaching, one's delayed in doing it, and we have all sorts of money still pouring in. It's still going to be a huge thing, but how much money is too much? I mean, I don't know. And how are these things going to affect things? These are all factors we don't know, but they have to come into our thinking. They have to come into how we're viewing things every day. So what I'm just saying is be prepared. Okay. I was never a Boy Scout. I think I flunked out of Cub Scouts, but be prepared nevertheless. Disney had earnings. Oracle. Well, let me do Disney first because Disney had earnings, and it's not normally the hugest mover, but on an earnings day it might be, and now it's off a little. It was kind of flat earlier when I looked at it, but Disney looking 109.43 this morning. I have it 98.66 to purchase it, and at 129.30 to short it. So if I say the number first, guys, just a heads up. That's just my way of talking. So if I say the number, then I'm looking to buy it, and if I'm at something, I'm looking to short it or sell it out long. Just so you guys know what I'm talking about, because that makes things more clear for y'all. Anyway, Oracle after that news was looking higher, was looking 170. I have it 158.64 as a first purchase, and I'm at 191.22 to short it. And NVIDIA, NVDA. Okay, looking down a bit, so 188 or so. I have it 179.28 to buy it, at 196.70 to short it. And we also had Tesla in the news. Tesla, the former electronic vehicles stock, I don't know. Seems like EVs are down in general. So the two that I follow, Tesla and Rivian, I have as kind of in the news, but they mentioned Tesla because it's still the biggest one, or considered to be the biggest one. So it's looking for 422.70 or so. I have a 395.62 to buy it, at 443.38 to short it, and might as well look at Rivian, which has also come off a lot. Remember Rivian in December in the 21, 22 range. Looking 14.73. I have it 13.28 to purchase it, at 16.46 to short it. We're going to go till 10:30 today. Notice you don't hear me coughing and sneezing, so fingers crossed. I might have to blow my nose a couple of times, but feeling better. So that's good. It's just rugged when you get like all glassy eyed and you're trying to stare at a computer. I mean, I did try to keep you guys up with those bunch of trades in WDC and STX on Friday, and then I just kind of stopped around 3 or so. I think I could have got a traded in Micron, but it was late. I stopped. I wanted to be done 3-ish or so. Anyway, relative strength today, only two, one on the long side, one on the short side, because it seemed like we came off our lows. A lot of things finished on the negative side of range, but bounced near the close. Okay, so I have IBM. IBM went out well, and it's looking 307.50 or so now this morning. I have IBM 298.18 to purchase it, at 232.34 to short it. Okay, 298.18 again is relative strength play. That's good till 11 in the morning. All right, so just a heads up on that. And Pure Storage, I have a short, and it's kind of gotten out of that 70-ish range that it's been in. Oh, so it's still hanging on to that, but it was above it. Now it's a little bit below it. I have Pure Storage at 72.84 to short it. That'd be up here. So looks like a big move, but it moves. For a stock in the 70s, it moves pretty well. So careful about that. And I have it 64.79 to purchase it, and that's for the over the course of the day. And we still got about 8 minutes till we open. And the Bitcoin thing, right around 78,000. Again, interesting, even though I don't get it. And I saw a strategy. It's off about 7% or so this morning. So correlation today. Flipping through some of the stocks that I follow. We'll just go like tech ones because we got 7 minutes and change. So Apple, waiting on Apple, waiting here. This chart is slow as whatever. Still waiting here. Finally. Saw that Apple actually fast sell off end of the day there on big volume. Okay, so that's curious. And after that, it's down more. So it's down around 257. So we're talking about a 5-point move in the last 15 minutes of regular trading. We could say, if we consider this, the first candle of the day, it's going to be down here at least initially. But Apple this morning, I have 245.64 to purchase it, at 267.35 to short it. Playing wide because either we're going to sell off big or they're going to try to rally us big, or maybe not. Then I'm not going to do many trades. All right, but that's okay with me. All right, because that's my plan. Right, plan. Very important. Work, stick to it. Doesn't work, tweak it or totally fix it. AMD, small slide on Friday. Looking 235s. I have a 227.10 to purchase it, at 262.24 to short it. Let's go CEG, Constellation Energy, and then we can go GE Vernova right after that. So 280, so up a little from where I saw it. I saw 279 earlier, but I have a 263.38 to purchase it, at 297.47 to short it. GEV. Waiting. For some reason, these charts are moving like whatever. Big range the other day. Tell you exactly how much, because I'm going off my phone again. All right, 36 points worth of range. New high in the 750s. Goes out 726. It's looking 734. I have it 663.97 at 770.56. So that tells you I don't know where the heck it's going, but planning on a move. Remember, it's $700 stock. It can move, will move. Charter, the day after earnings, moved pretty well, back over 200 again. 205 was the last I saw it this morning, after being up around 215 at some point on Friday. All right, so 208 now. Okay, so a lot higher than it was. So maybe here we go, buying this dip, trying to push up in certain stocks here. I don't know, but I priced it out here. I have it 192.66 to purchase it, at 218.90 to short it. CoreWeave, kind of hit up whatever I can here. CoreWeave looking not right around 93. I have at 81.55 to purchase it, at 104.03 to short it. We can look Carvana again. I know we looked at it real quick before. And again, significantly below 400, which I thought it would hang on to. And it's like it managed to stick above for most of Friday, then gave it up after going back to Wednesday where it traded in the 370s. So that should be a curious level there in Carvana. I have it going through there. I have it 360.12 to purchase it, at 437.09 to short it. So again, being careful there. IBM we mentioned. Intel kind of talked about for a sec or two before. Okay, so Intel looking after going out weak, after sliding most of the day, has it lost its luster after the earnings came out Thursday? Maybe. Looking 45.83. I have it 41.81 at 50.23 to short it. So still expecting a move there. Quantum guys lost significantly from their 52-week highs, but IonQ was looking a little bit higher there. Yeah, looking less than a buck higher. Looking 40, 60 or so, 40.70. I have it $36 to purchase it, at 45.58 to short it. So expecting a move there. QBTS, D-Wave. Wait. Okay, looking 21.50 or so. I have it 18.48 to buy it, at 25 to short it. Rigetti, RGTI. As we're within 2 minutes of opening, and we'll see. Is it going to be a bigger day, or is it going to be somewhat quiet? Rigetti looking 18.36. I have it 15.86 to buy it, at 21.59 to short it. Should mention Rocket, because that had an interesting day on Friday. Almost picked some up just under 17, got it down as low as 17.05. But, close doesn't count. Not horseshoes, remember. So what to do with it? I have it 15.85. It's 17.88 right now. And at 19.77 to short it. So hoping for some kind of range there. The solar ones I'm looking at, Sunrun. Always good moves here. Love this stock for the way it moves. Don't always get it, but usually in play for it. Looking 18.93, I'm 16.88 for it. So it has ticked up a little bit, at 21.39 to short it. So a lot of room there. First Solar. Waiting here. All right, looking 225. I have it 205.31 to buy it, at 246.22 to short it. And let's do the other guys I picked up. The SanDisk. I chose to start following, and then Seagate and Western Digital, as we're about to get things going. Okay, so SanDisk looking 588. I have it 500 and change there to buy it, at 661.52 to short it. STX. It's 9:30 now, so we'll get to see where it opened. Okay, trading 407 and change. I have it 367.12 to buy it, at 448.63 to short it. And Western Digital, WDC. Waiting on, see what's going on. All right, trading 245, so down a bit. I have a 214.01 to buy it, 278.93 to short it. So obviously being very careful there, and we're into the day. So let's check out what's going. Let me see on my phone what's going on this leaderboard here. I try to pick up my pen at the same time. All right, so Disney's off some. Okay, so Disney, going right to it. Disney's trading 105. Okay, but getting some green, trying to bounce a little right away, see if it actually gets there. It's been under 104. So that's curious. I did price out Moderna today, and I see that it's down a bit. It's trading 40 to 42.50. I think I have it right around 40. Okay, flipping to Moderna. Yeah, I have it 40.13. All right, so we'll see if it moves around some. Starts out, near the top of my list. Okay, and again, see how much things move. Okay, MDB right away. Okay, quick down candle. Okay, it's already traded 360. MDB, where am I in MDB? All right, MDB, I'm 341. Okay, but I want to have MDB kind of at the ready for me. So I'm 341.06 for it. I'm not putting it in, but just want to have it on my sheet where I can see it, as I move around from screen to screen, just off of the phone kind of thing. It's an easy reference there. Aha. Tesla, that former car company, coming off right away. And Tesla, like I said, I have a 395.62, but it's already down. It was been as low as 415 and change now, right around 416. But yeah, in the news and moving right away. Upside here, okay, we got SanDisk already trading 614. This is why I price these guys out so wide. Okay, and look at that SanDisk going up right away. And I know I'm at 661 something, but they're going to run them again? I don't know. So 661.52. I'm not going to put that in yet. So I should really look at WDC right away. We saw it down, but here's some green right away after it was down. Okay, and again, I have that at 278.93, but I'm just going to make a note. And got to look at Seagate 2, STX. Okay, and these guys are good. Like we trade the quantums all together. These guys all move together. That should make for some interesting trades. Seagate not up as much, but STX, I still want to have it in front of me. I like writing things down still. That's pretty old school, but that's me. Even though they're all like, on phone and focusing on just one screen for you guys streaming on. So just so I have it. So those guys are moving up. Let's flip back to stocks in the news, starting with Oracle. Okay, and look at it come off. Whew, there goes the gain there right away. And all right, I just put in Oracle and bid 158.64 for it. Okay, so put Oracle in, and I want to check out a couple other prices here too. Not going to put them in yet, but I want to have a few prices available for me. Okay, 157.46 and 156.68. Okay, and again, I didn't put those in. It's already been down to 164 and change. So again, anytime I see candles like this, they get my attention real fast. Still dry, really nasty case of dry mouth still, even though I'm like getting better. Still a little congested, but when your nose is running like a spigot and you get those nasty watery eyes, that's no fun. Don't wish that on anybody. All right, Nvidia not moving as much, 186. I mean, off 4. A little bit of red there in the first 5 minutes or so. Again, not a mover. Have to keep track of it, but not the biggest mover. Remember, I mentioned Disney because the candle caught my eye, or the down part caught my eye, but trying to bounce. Hasn't moved much since then on the second candle. Back to Tesla real fast. Waiting on. Okay, so like I said before, been 414. It's kind of hanging here on the second candle. Does it want to try to do a bit of a fill, or is it going to start to make the down move? So I better check Rivian then too. Okay, Rivian basically nothing so far. I mean, off a little bit, but nothing much. IBM got as a morning long. There are two relative strength plays here. Okay, and IBM up from the get go, right away, up from the get go. That scared the heck out of me. The cha-ching, I just like jumped, but so be it. Uh, IBM getting going right away. I'm far away here because I'm 298.18 for it to buy it this morning. Short, three. I put in 323. I tell you guys, I still think I'm dyslexic because I put a number in wrong when I wrote it down. I wrote in 232. I put it on my sheets wrong too. That's bad. I do not want to short IBM at 232 this morning. Okay, a significant discount. So my spreadsheet, I put it in wrong. The number I wanted was 331.22. Eek. So I'm at 331.22 to short IBM, and I'm still far away, obviously. Filled it in there wrong. Just going off my spreadsheet. Yikes. Pure Storage. Okay, here's that move up in Pure Storage, and just to be safe, it's traded over 71. We get these candles. Seem to always get these big candles in Pure Storage invariably. Not more so than even just on the open and stuff. So just putting in now 72.84. Put that in just to have it in there, and that's a morning trade. And what would my next couple of prices be here? 73.93, which I'm not going to put in, and 74.84. But maybe it gets there. I guess we'll see. Okay, time to do some flipping here, flipping through stocks that I follow here. Just going off of my list here. Let's look at Apple. Okay, and we saw, down. Remember, I mentioned down around 257 initially, right? It was looking 257. Well, guess what? Friggin' opens up, basically flat, and then gets up to almost to 264. I mean, what the heck was going on here? You know, PS that gets my attention because I'm at 267.35 to short it, but then right back down. Zoom, and now down more. All right, back down that a ways. So that was kind of freaky. AMD Bitcoin is right around 78,500, so that's bounced. Okay, AMD moving up. So here comes this by the dip kind of thing, I guess. Pushing it. AMD has been as low as 235, and now it's up, 244s. So big range there. It gets my attention. Yeah, would say so. Even though I'm at 262, but AMD, just want to have a note here for myself with what I have going on there. So yep, big move there. These Vax guys, Biontix, okay, off foreign change. Biontix, I'm $10 away there. I'm 99.70 for it. Moderna, So off some, and I said I was like low 40s here. Went on Moderna, and for some reason taking forever. Might be time for a new laptop here, just used for the stream. Okay, so trading under 42. Okay, if Moderna didn't have my attention before, I got it now. So just put in, all right, put in Moderna. I'm not going to look up any other prices for now, but Moderna, I put in 4013. So if it makes the move, at least I'll be there. Trading right around 42 right now, though. Novavax, I did not price out as we're like 10 minutes in. S&P's up. We can call them flat. Um, NASDAQ up 0.2%. Dow up 0.3%. Bitcoin coming back some 78,500, but still off, under 80. Is 80 going to be a number for Bitcoin? I have no idea. I really don't know. Anyway, Novavax at $8.50, not moving much. On to Constellation Energy. Okay, so coming off a little, but not a big move. $5 worth of range. And I want to see, things. I kind of know what normal ranges or anticipated ranges with these stocks that I follow, and if it doesn't seem like it's acting right, then I don't look to get involved, or I think something's up. Like here, $17 isn't bad there, but it is a $700 and change kind of stock here. Did it make a new high? No, not quite. Doesn't mean it won't do it later. I have it priced out to make a new high. I would short it starting up at 770 or so. So I'm pretty far away there. Back to our other C stocks here. Charter. Kind of moving around. Sitting down, I get cold. All right, so Charter going up. Charter, nice little move here. Okay, definitely gets my attention. All right, because I have it at 218.90 to short it, and it can make these moves. And tell you what, I just put Charter in to short it. Okay, just put it in at 218.90, so I do have it in. I'm not going to look to see what else, where else I should be doing stuff there, but I do have Charter in there. Been acting well since the earnings came out. CoreWeave saw it around 93. Been lower, been under 91. Okay, I am down at 81 to buy it, so not really focusing on that yet. Carvana getting back. What did I say before? Is 400 a number here? Getting back to it. Is it going to stop short here? All right, and go back down, or is it going to push through? Okay, we're going to have to see. I know maybe there's a small short here. I want to see how it acts. If it gets up to here and stalls and kind of plays with it, I don't know. Maybe I look to do something. Otherwise, I'm way the heck up because the moves last week were big. So I need to be smart as far as that goes. All right, I want to go IBM. I just went IBM. What am I thinking? We saw it higher before, but did slide back a little bit. Didn't really need to go there because just went there for the relative strength thing. Intel. Okay, up $1. Fairly decent first candle. Not super getting my attention yet. MGB. Okay, it's come back up. This buying the dip stuff, I guess, right? Because here we go with MDB. Back $13 worth of range here in the first 15 minutes. So not bad. You hear the frustration in my voice here that, here we go again. Everything's going to be just ducky. Everything's right in the world because Micron is up, et cetera, and so on. $18 worth of range here. I am at 451.32 to short it. So way the heck up here to short it. Not enough of a sample yet to look at other trades, look for other trades here. So not doing anything there. Did we look at Palantir? I think first look at Palantir this morning. Okay, so up $3 or so after it opened up, sells off immediately. All right, but only $3 worth of range. Let's look quantum stocks. IonQ. Okay, coming off there. Quiet. Rigetti. Waiting on also, actually a little more range there than IonQ, a little bit more of a move relative to the price of it. QBTS. Oh, excuse me, guys. All right, fair. Just down a little bit. Want to go back and revisit RGC, which I priced out today, $16.25 for it, then down $1.20 per entry, and back to up we go. I know I'm not looking to short it. Don't know if I can borrow it, but off to the races, I guess. So see ya later. Bye. As far as that goes, Rocket after the down move on Friday. Moving back up. Okay, 1861. I'm at 1977 to short it. I kind of want to keep my eye on it there, not putting it in, but 1977. What else? Can look Sarepta as well. SRPT. Okay, no move there. I did not price out. I didn't price out end phase. I think I meant to with Solar Edge. I think I just forgot. Pretty silly of me, but all right, not really moving $1 worth of range there for Solar. Okay, ran up to 230. And where am I first Solar? Tell you in a sec. Okay, I'm up at 246 and change, so I'm far away there. Sunrun. Okay, so kind of unlike last couple of times I've streamed to you guys, where there's been it's been like kind of mess, a lot of stuff going on, but this has been quieter, and it could be the nature of the buying this stuff kind of thing. Bitcoin 78,000, almost 300 there for a second. Yeah, Sunrun, I'm pretty far away. Okay, going back to my list here, stuff going up, obviously that RGC stuff. Next, second look here at SanDisk. Okay, so it has been up to 640. Okay, so great first two candles, pulling in now under 620, 617 and change. All right, so moving, which is good. There definitely some money that went into it real fast. So that is that. WGC first candle now going sideways. All right, I'm at 278 and change to short it. So bear that in mind. STX did a few trades there too on Friday. Some good, some bad. Some were like hit and run. Some were fairly decent in STX. Like 3 points and change. And again, the size wasn't huge because it's a $400 stock, but those things add up. If you do 5 or 6 trades and they work out for you, it turns into a good day. It's not about being a home run hitter. And here comes my baseball analogy now. Yankees when they were winning World Series, nobody standing out, doing the right thing, moving runners over, bunting, you know, making contact, drawing walks, hitting. You know, I'm just talking offense here. And oh yeah, they had some halfway decent closer. What's that guy's name again? Riviera or something like that. All right, Mariano. No, I'm not going to forget Mariano Rivera, for goodness sake. But Yankees now swinging for the fences. It's, all or none, striking out a ton, trying to hit home runs every single time. And that doesn't work unless you're Aaron Judge. And there is no other Aaron Judge. Right. So when's the last time the Yankees won a World Series? 2009. All right. Not good. And not looking all that good this year either, because the Dodgers are spending millions and trillions and zillions. Anyway, this is not WFAN or whatever in New York. So back to these guys. So STX sideways, looking like WDC. So after candle run up, we see that contrasting with SanDisk, which we saw coming in some. So just figure I mentioned now SanDisk going back up. Rumph. There. So I did mention that. I see Intel creeping up a little bit more now. And I get I'm at north of 50 to short it. So a little bit north of 50 to short it, but kind of getting my attention. And it can move fairly fast too. All right, so I just figured I'd mention that. Flip side there, Disney, not much going on in spite of the earnings. Hey, try and make it small attempt at gap fill. Not that awesome. Biontech's. I mentioned Moderna. Put in Moderna before Biontech's. I said I'm like 99 for it, but yeah, a little sliding down. I mean, I should at least have my number handy. All right, so it's 99.70, so it's still pretty far away. I'm not putting it in, but I figured it merited checking out, mentioning at least anyway, with Moderna a bit higher. Moderna coming back a bit, still down on the day, but coming back, not down as much. Can we have, nothing particularly huge on the downside, all right, for starters here. So, and these, the guys, the SanDisk, WDC, and Seagate's moving there up a bit. But let's go back to our list, because remember, that's what we do. We keep track, keep checking, and we're diligent about it. All right. Again, Oracle had that big candle since then. Not that thrilled about it. I did put in the 158.64 bid, but creeping back up. And now back up to up some on the day, up almost $2 on the day. Excuse me, I need some water. NVIDIA, I think we'll be back to a bunch of earnings for tomorrow's session, so that'll be good. And that, hopefully we all can take advantage of that. NVIDIA down and just hanging down there, been a little bit lower. And again, I'm not, to me, it's not a great trading stock. It's been a great holding stock, right? Because it's been up a lot, but it doesn't move. Look at our range for the day, $1.40 or so. Not really seeing that big a move there. All right, so I'm not surprised. Tesla had come off immediately, and what do we have now? So down some, making a bit of a move back up. I'm away on both sides here, but making an effort after the big down candle. A couple of okay green ones. Is it going to stall here, and not start to get to there? This is a curious level here, 423 or so. See some stuff went on there on Friday morning. And I think of it now, looking at the day, it's February 2nd. Happy Groundhog's Day to everybody. I wonder if that movie is going to be on all day, if they still play Groundhog's Day every single part of the day, for the rest of the day on AMC or something like that, with Bill Murray and Chris Elliott, maybe was the cameraman, and I forget who the female lead was, but and it'll come to me later on, but can't think of her name right now. Andy McDowell, but curious if that's on. And did you see his shadow? I'm over winter, guys. It's February. I want warm now. I'm in Vermont. I'm out of my mind. Hopefully, go back to Brooklyn for a little bit at some point. I But Rivian now, you can take a look now as well. So Tesla come back. Rivian was doing squat diddly before, and still, less than 30 cents worth of range. Not really seeing a move there. So was planning on some decent moves today, and with the exceptions of SanDisk and Seagate and Western Digital and that RGC crap, not seeing the move. Well, maybe charted to an extent. All right, so I guess we can talk about plan a bit. And in my case today, I don't feel bad about it because I don't need a bunch of crappy positions. If we do get a big move, and I have stuff, and I like, I think I play defense pretty well. And I'm smart about when to get out of stuff. And I'm not, even though I'm not using physical stops, which I hate because been there, done that, gotten screwed on stuff like that before. Uh, it's not a good feeling. Seeing your stuff go red. It's not a good feeling psychologically. And I try not to be too up or down either way. Maintain flat, maintain calm, be focused. All right, it's okay to be a little excited about the situation, but not grabbing the pom poms out and cheerleading and stuff and whatever. Uh, Downplay it, be calm, because you don't know what's next. Never be too up or down. But think positive, right? We're approaching trades. Sometimes I read about traders considering downside. I consider, I'm considering the downside, potential downside in my pricing, and then I'm careful to price things, but I'm focused on winning trades, right? I want winning trades. I'm not gonna think about losing trades. When they're done, I want to learn from losing trades. All right, I want to learn. I want to learn from winning trades too. I learned stuff. Like I said, did okay in Seagate, did okay Western Digital on Friday. Saw some amazing moves in them because I hadn't really been following them that much, but wanted to learn. And I think that's in there. That's in my head, and hopefully it stays in my head. It doesn't leak out my ear. But I want to remember. I want to be there, be ready for it the next time it happens. Okay, and I get that they're going, kind of back up some today. Although not huge, but I want to be ready to go. Let's take a look at AMD, which I did at least write down. As we're a half hour in, and I'm only doing till 10:30, just because I feel it's just too a bit too much for me, guys. Not that I don't like talking to you and all, but it's too rugged on my voice to do it. Now, gonna get into it now when I'm doing 5 days a week. I promise I'll get that done. All right, we're at a key point here because let's look at the Friday thing. All right, couldn't get past there. Trading opportunity. This could be. We could get it ripping through here with some big candles. If I did do it, it would be quarter size or half size, but I'm going to hold off at this point. I want to see a few more candles out. And could I be missing out? Yes, I could well be. And I see we are a little bit above those levels. So do we come back into there? Is it a better trade with a retrace down here, down to around 241 or so? From where this took off. It got through there real fast initially. Does it come back into here? All right, maybe that's a trade. Maybe that's a better trade. All right. And actually, I'm going to do, you know what? Okay. Just did that. 240.80. All right. AMD with smaller size. All right. So I put a 240.80 in there. And in this case, I'm not going to give it a lot of leeway. I'll probably give it to, give it a buck or so. All right. In fact, I get it, but I'm in there 240.80 for quarter normal size. All right. Not playing the breakout. Okay. Back to our trading list because we've been quiet. I'm disappointed that we're that quiet this morning. Oh, let's first look relative strength. Let's look IBM, which I'm away my relative strength play, but pulling in some now after it traded as high as almost 312. All right, now under 308. PSTG Pure Storage, which I have as relative strength short, only had the two this morning. Normally they're more than that. Okay, and Pure Storage did put in at 72.84. Haven't seen another big candle. Had those first two fairly decent sized candles here. Needing a couple more to get me short up here. Okay, and then that I do have that in though. I do have 72.84 in there, and that's good until 11. All right, now back to the list. Okay, and here we go. Back to Vax guys, because BioNTech is next alphabetically. So then I'll go Moderna after this. Okay, so hanging down here, haven't seen it get going one way or the other since about 10 minutes ago. Moderna saw it coming back a little, waiting here. Okay, so it did go back to almost 43, retreating a little now. Haven't seen, it below 42 in a bit, in the last 15 or so. I did throw in 4013. Again, we'll see what plays out. Biontech I put in, was going to check Novavax real fast here. Wasn't happening before. Yeah, not really happening now either. Okay. Okay, let's go Constellation Energy and GE Vernova. All right, Constellation Energy coming off. And even though I have a 263.38 that's getting my attention, I'm not going to put an order in. But seeing that move, all right, a lot of red to start the day after a little bit of stuff here in the first 10 minutes. Okay, definitely gets my attention now. Curious as to GEV. And there's no correlation here. Okay. So they're not acting for a long time. It seems like they're coupled. Uh, Past couple of days, definitely seen an uncoupling. And we'll just have to keep watching and see how this stuff all plays out. And I see Bitcoin back under 78,000 now, 77,800. Just figured I'd mention. Charter, I know I just mentioned a few minutes ago, but checking it again since I just typed it in. All right, some sideways here. Sideways going on. I did get a little excited and put it out at 218.90 when I saw it go up right away, almost to 215. But definitely it's quieted down some. Core weave, as with 35 minutes in on a quiet day. All right, core weave just has been under 90. Okay, and again, chalk it up with CEG, as in it can move pretty fast. So I'm 81.56 for it. I'm not putting it in yet, but has caught my attention some. The range isn't great. Carvana had that 400 number going on. Okay, was playing with it, and look what it did since then. Right, totally through it. And where's it at? What did I mention here? I said this could be right. Uh, not enough. The way it had been moving last week, it's not enough of a range-based move for me to look to short it here, okay? Even a smaller size here. But could be, or it could be a breakout here after all this work it did on Friday. So we'll have to see. But that was like, I was like, here it is. Remember I was talking about it, like flirt with 400. What does it do? Does it pop through or does it retreat from there? And guess what? Call it like a typical Carvana move there, right through. All right, Intel kind of got my attention some before. Thinking playing it short. All right, some consolidation around the 48 level. So not big, but good move here. 45.50, 48.27. So pretty decent, almost a $3 range. Okay. MGB, MongoDB started out with a down move, picked up $16 worth of range. I'm far away. I'm $20 away to short it. I'm really far away to buy it. So nothing much to talk about there. Micron. Sorry, messed up off my list. Okay, perked up from the start. Now a lot of sideways. Not quite range bound. Is there going to be a trade one way or the other here? Not really seeing it yet. Palantir. Okay, push back up. We saw it down. Not a lot of range. That's a recurring theme, I guess, this morning. Okay, going back now to let's go rocket before we go quantum stocks. Okay, we go rocket and near the highs on the highs of the day. I have it up at 1977 to short it. So I'm $1 away here to short it, and that would be some gap fill from Friday. Okay, and it's moved okay. It moved like $1 or so. That's decent for that. Okay, so quantum stocks, we'll go Rigetti first. Okay, so made a new low, bouncing back a little bit. Range is fair. QBTS. Obviously, I priced these out looking for more here. QBTS also made a low. Small candles, though. IonQ. Waiting on. Okay, a little bit bigger. Talking about a stock at a higher price. Also made a new low. Now back to 39. I am pretty far away in both sides there because IonQ can move $6 or $7 as far as range goes in a day. All right, we got lots of time here for these guys to move. Okay, just haven't yet. And again, the thing to do is hopefully I can post some trades again on Telegraph and maybe some charts too because I do have the app for TradingView. Oh boy, excuse me on there. Switch to decaf, and that's killing me too. I think maybe that made me sick. Should get my self to the supermarket today and buy some regular coffee, not decaf crap. Uh, Solars for solar. Okay, back in. So big ups, some fairly big downs. Okay, so that's somewhat interesting, but adds up in the end. I'm not really close one way or the other right now. Sunrun, the other one I priced out today. Hit down a bit, but again, I'm not close yet. need bigger moves in these guys. I pretty look for bigger moves in these guys in general. And let's look at the SanDisk. Okay, so pulled in, and guess what? Here we are going higher, right? Okay, so better plan. Okay, just put in 661.52. Just put that in. I better find some other prices here though. As it going higher as I check. All right, I'm going to go 671.52 and then 681.52 because of the way it's moving. And that's, it's the size is down here. Okay, size is down here on this for me because $600 stock that's moving a lot, a lot, a lot. The range was 146, $147 on Friday. All right, so back to plan. Be smart about it. All right, and again, I tell you guys this stuff from experience. Okay, everyone makes stupid mistakes. I've made many a stupid mistake in my life. Everyone makes mistakes in their trading. But use them as learning opportunities and don't make the same mistakes again. Okay, that's been an important part of my growth as a trader. STX, so learning from what these stocks did on Friday. Okay, STX making new highs. Okay, and I see it's 434, and I'm at 448.63. Just put that in. Okay, and I better find at least two more prices here. Bear with me. Okay, I'm gonna go 454.38 because it's my next available price on here, and then I'm gonna go 461.86. Okay, so wide. It's the nature of the moves on from the other day. Big moves. Okay, WGC, same kind of thing, up to 266. All right, I just put in 278.93 right there. Okay, in WGC, I better find some more prices. I'm going to go 282.60. I'm not putting these in yet. And 286.27. All right, all scripted, all planned, all off my sheets. Okay, all of my spreadsheets, just so you know. So I'm not pulling them out of a hat. All right. Do I skip around some? Yeah, based on the moves here. It's not like I instantly go with the next one. If I look to short something and my next short price on the sheet is 10 cents away, I'm not going to throw out 10 cents away as my next spot. All right. So depending on where the stock is, how much the stock moves, that's going to influence my next spot there. Just so you guys know. All right, back around. Let's go back. We can go back to AMD because I did put in a small bid just to see what we had happen here, and now I'm freaking waiting on it to show up. Okay, and didn't work out for me. Okay, didn't work out because it did break out. I said it was a little above, and I said it's going to hang on here. It's going to retreat to here, and I'd put that in, but it was the breakout trade. Okay, so the breakout trade did break out, and here we go. Here we're up to 249 and change. Okay, so that breakout did work. If you saw that and you had enough conviction to do it, good for you because that's $4 or $5 there. So good job, really good job. Okay. In the meantime, let you guys know canceling. All right, so I canceled that 240.80 because it was there for a specific reason. It was there for us to retreat to there and then have some kind of move within this range and then maybe test the breakout, but we got the breakout right away there. So had a plan, the plan didn't work. Maybe rethink that next time. But I think I told you guys many a time that I don't play breakouts that oft. But would have there, and I was thinking about it, but stick to your guns. All right, going back around now, seeing what's on our list here. Things moving. The RGC I'm going to ignore. Okay, we'll revisit all the SanDisk and Western Digitals and stuff now because I want to check. For my sake, just like to see it. Just like to see the chart and stuff. As I said, there I'm still near the top. Like I said, I'm at 661.52 52 to short it. 661.52. That is getting a little verklempt, which I don't even know. Is that a Yiddish word? I don't even know. A Russian or anyway. Western Digital right about on the highs, a little bit higher. I'm at 278.93 to short it. Seagate. Okay. Came off the highs a little, has been what? Where's it been? Up just south of 435. I am at 448.63 to short it for first shorts. And again, remember, this is me, and I'm never committing full boat here. Okay, always segmenting in. All right, works for me. Will it work for you? Maybe. Okay. Flip side there. What's down? All right. See Disney just under 105. Hasn't done much since it first opened. Waiting on Disney here. Okay, so tried to make the move to start to fill fade in here, where it's hanging, a couple small candles hanging around 105. All right, I'll skip the VAX stocks for now, and we'll go to a new stock. The VAX stock's not moving as much anymore. Going to Oracle. Okay, so pushing back up back near 170. I'm not close now. I'm not close either way. I had put in the 158.64 bid when saw this happen. Excuse me. But going back up, so not relevant right now. NVIDIA, we had small range before. Bitcoin back to 78,200. S&P is up half a percentage point. NASDAQ up 0.8. Dow Jones up 0.6. So with the getting some buying, I guess we're getting a bit of buying into this dip. And that just gets, are we back to complacency? Everything's okay. I want, a little bit of helter skelter going on. I want to see some challenges. I get buy and hold, but buy and hold, boring. What am I? I'm a trader here. All right. I want vol. I want to see stuff moving. Okay. I want to see, lots of movement. It can be choppy. That's okay, but let's move. Let's have some down too. But still has a long day to play out. We're not even an hour into the day, although I'll be gone from you guys in about 10 minutes or so. All right. Again, saving my voice. Back to NVIDIA, creeping up, kind of broke out the way AMD did, but to a lesser extent point wise. All right. But moving up, where am I? NVIDIA to short it. Oh, way the heck up 196. So far away there. Let's look Tesla. Okay, so Tesla's been quiet since that first candle. Tesla's been quiet because the Tesla will look Rivian too. So, and Rivian we see 1456, and it's not much of a move. Pretty quiet day there as far as stuff goes. Rivian had been moving okay. What I have for range on Friday. Flipping to Rivian there. Give me a second, guys. Just going off of my sheet. Oh, it's near the top. Everything else in alphabetical order, so kind of mucks me up. When 77 cents worth of range, but not bad, but only 30 cents, less than 30 cents today, so not particularly relevant. Let's go back to the relative strength plays, which not close. Only two of them today, and not really there. All right, is this another breakout here? Does IBM go through here? All right. Again, I didn't hop on AMD, not hopping on IBM here. If we're looking at my AMD trade, I'd probably be here, looking for something similar. But here goes the green, and here goes IBM, breaking out a little bit later, like 15 minutes after AMD. So curious to see real fast. I hit fat finger, hit the wrong thing, but what AMD is doing. Okay, and there's that breakout going back happened before IBM, but there it is, and it's still in a little now. But yeah, it happened. It got up almost to 250. What did I do? Nothing down here, that's for sure. Pure Storage. And again, if I wind up doing stuff, I'll let you guys know. I'll let you know on Telegraph. I'll let you know what trades happen. So try to follow along on there. All right, Pure Storage has gotten up to 72. All right, I mentioned these candles, and all of a sudden we get these candles, okay? Haven't seen the surge that I wanted to see. I want to see it up to 72.84. All right. Sometimes it's even better, even if I have to play a little, I mentioned playing defense before, I'm up at 72.84. If we get good candles here, I'll take my next piece. I'm allocating money here for at least another two pieces here, at 73.93, 74.84. So if I get big moves up, I can deal with that because it'll come in. All right. Get the move up. It'll come in. And I say that it doesn't always, but things move, and chop here. You get to know the stock, you see the move up, see the move back. It moves like that. All right. Get in sync with the way the stock moves. All right. You want to know it. You want to live it. All right. All right. That's why I'm looking at these stocks all the time. That's why I want an uncluttered chart here. Okay. I get indicators are good. All right. Not detracting from indicators, but I see things better on a 5-minute chart without stuff in there. Okay. And that's me. Do whatever works for you, but this is me seeing stuff. All right. Anyhow, I'm about a buck away here from getting that, but still have some time there, a little over a half hour before that potential short goes away. And then I'll be higher as far as that goes. Okay. So now back to our list. We haven't looked at Apple in a few. Go to there. We'll see what we can get to. And then the last 2 minutes or so, I'll mention, just some thoughts for the rest of the day. Okay, so Apple having a nice day. All right. And I just put in, all right, Apple's up to 264. I just put in a short here in Apple, 267.35. Okay, not a huge mover, obviously. Apple. I just want to find a couple more prices here. I'm not going to put in any more prices, but I just want to have them handy. All right, I'm going to go 270.72 and 273.08. But I'm not putting them in yet. If I do, you'll hear from me. All right, so I'm in. I'm looking at short at 267.35. There. So we're getting moved. What did we just see? We saw moving Micron, moving AMD. Okay, seeing tech buying here. All right, let's go Intel. Moving Nvidia. Dow's up 350. Dow's up 7/10 now. Okay, Intel saw it earlier, right? So the start of the day, creeping up now. Right, around the highs of the day. Okay, so kind of seeing that. Let's go back to Constellation Energy, which was going down, and then we could look at GEV, where we saw the similar traits kind of went away. All right, not seeing the move here. Okay, not seeing the move in that part of power. We've seen it in GEV. Seeing consolidation, okay, and consolidation I really don't have much of a thought on. Remember GEV hanging around, round numbers. We were talking about like 670, 680, 690, 700. Now we're up near new highs. I can't really say that yet because hasn't spent enough time in these spots. Charter, and I'll go core weave. All right, so Charter kind of hanging up there, and I do have a short out there at 218.90. Core weave was around $90, but got my attention to the point there. I made a note or two. All right, still hanging out around $90, so not seeing a flow into there. We saw the Carvana breakout before. Can it push through? Remember, I was thinking, I mentioned potential short here, and I said, nah, it's Carvana. What am I, out of my mind here? So I'm still way the heck up there. I'm at 430, a little above 437 to short Carvana. All right. What else should I? Anything? I'm just going to flip through. I'm not going to go through everybody else here because we're down to the end here, and then Eric's going to be taking over and can listen to his take on a bunch of these things this morning. Okay, I want to go to SanDisk now. And here we are. We're getting these moves, and I'm getting close here. All right, I'm at 661.52. So guess what? Guess what? Right on the cusp here. Right on the cusp. Okay, and I got it. All right, good. All right, so at least I did something with you guys this morning. So I do have a little bit of SanDisk. All right, we'll see. We'll see what happens here. Next price for me is 671.52, and then 681.52. So I'll let you know where I cover it on the flip side here. So see where it goes. And it's not, it's to the point where if it does move, I get my next piece and I get it's 10 points. It might seem like a lot, but it's a small amount of enough amount of shares that it's not bugging me. Okay. So it's tradable there. And I know the way it's been moving. All right, let's go WDC. All right. I would almost call it unconventional thinking there as far as that goes. All right. WBTC, I'm still far away. All right. I'm up at 278. I did put that piece in. STX, Seagate. Okay, some sideways there. So what we saw in SanDisk, we didn't really see in WDC or Seagate. All right, so that's interesting. Back to there. Again, we're just about at time. Anything else I really want to mention? We can look at Apple one last time here. Still getting up there. If I do get that Apple, let you guys know. All right, I'm out of here, guys. Have a great rest of the day. Tune in on Telegraph and watch out for some charts and some trades and maybe some comments. Bye.
Good morning. How is everybody this morning? I'm new to the TBD network. My name is Eric, and this is going to be Magic Internet Money. It's the study and education of blockchain, crypto, and the back end, the under the hood, the part where you put your dollar in and what the heck just happened to your dollar. So I want to thank our previous host for his breakdown on the market, uh, which is good news to hear. And if you can follow the stock market, you can follow the crypto market. It works on the same principle of liquidity, tokens instead of stocks, very similar, market makers, and smart contracts and blockchain. So, what I'm going to be doing here is mostly on a episode basis is we're going to turn this into like an educational to understand the difference between crypto, blockchain, token, etc. Uh, so, nonetheless, let's get started. Uh, so, crypto and blockchain, two different things completely. One of them is a token. One of them is the underlying mechanics that the tokens run on. So, if you go way back in history, for digital assets and crypto tokens, you think of probably Bitcoin, Dogecoin, Solana, XRP, uh, and many others. So, most of all, each token underlying is a program that you write on the or you code in the program, and you can create what's called a token or a network. So Bitcoin was the first one, and I'm sure everybody's heard of the white paper and how it outlines the how the token will work. And one thing to keep in mind is that a token is just a contract. There is no real token to hold in your hand. So it's a representation of the U.S. dollar tokenized. Every token is that way. So if you go back to Bitcoin in the white paper, it's supposed to has a lot of things that it claims, and it's going to be a debasement trade on gold or the dollar depreciating. It's supposed to be digital gold. It's supposed to act like a run to safety, like when something epic happens in the world, people flee out of the dollar or their stocks and put it into safe haven instruments such as Bitcoin or XRP. And one thing is, I may say Bitcoin a lot, but I'm not a shill. Also, secondly, we just go over this real quick, is that this is no financial advice. I'm not a financial professional. I don't know your risks. Not going to shill products. I'll break them down uh, as far as the tokenomics and how they work, uh, and and a lot about blockchain and the programmability of money and uh, central exchanges, decentral exchanges, uh, market makers, liquidations. Liquidity is a big one. What happens to your dollar when you buy a token? That's it's kind of important to understand. Uh, so, but we're going to do it in a step by step, slowly but surely, one episode after the next, kind of building up to get a broader understanding of not only crypto but the blockchain. So fundamentally, crypto rides on blockchain. So it's a smart contract. Some of them are what you want to call like we'd say in different levels. There's the blockchain where it hosts only a crypto token, such as Bitcoin. It's one smart contract, one token. Uh, then you have certain things like Ethereum, which is one contract that's a token that's used to host rails that other tokens can be built on. Whereas Bitcoin, you can't build anything on top of Bitcoin. though they have been trying to do some very creative stuff by adding data and metadata to the hash for each token. That's a whole nother topic. But today we're just going to go over some of the basics of crypto and the basics of blockchains. So uh, a lot of people stay fixated on the price without understanding that in reality, the price is about the output, not the token. So a lot of people think that it's internet money, it's digital gold, anonymous payments, a stock you trade on an app. Some people even think it's a scam or a casino, but none of these are they're all myths. So a lot of what I'm going to be doing is breaking down the myth because I'll be honest with you, like you look at the charts, you buy your token from the exchange, and you sit there and you watch it. Then you listen to people on YouTube, and they come up with 1,000 reasons of why the price is doing whatever. So here's the brutal truth: is that price narrative price excuse me narrative follows price. So when price goes up and down, if it goes up, there's a narrative. Why did it go up? Well, it went up because Bob invested, $10,000 into the network, and the price goes up. Or the price goes down. Well, why? What happened? Well, Bob sold that token, and now the price goes down. So anybody can set the narrative after the price moves. So price moves, then the narrative is set. And then there's big. So narrative can also be called macro, and it's the macro environment of the news around financial instruments. So say there's an economic collapse in the stock market. So first the price moves, and then the narrative is that the stock market just collapsed, and then many people will have their own spin on what the narrative is. But the narrative can also create like a group of people believing the same thing. Once that group of people believe in that, they'll make their financial decisions based on the narrative that they believe. Like everybody's excited, they FOMO in. So FOMO is fear of missing out. They'll FOMO in, and the price will rise, and then all of a sudden the price shifts, and so does the narrative usually, and so does the people's mindset. Uh, so when the price is moving real fast, you have the fear of missing out or the FOMO, and then that same thing works in the opposite direction. If you ever look at the charts on your exchange or whatever, candle charts, just like our previous host was going over. So candles it's like rhythm, and the easiest thing to think of when you're thinking about that is everything that goes up must go down. Nothing continues to go straight up. So behind those price candles or what's called the exchange, and behind the exchange is what's called makers, market makers. So the exchanges, they sell you the tokens, and market makers provide the liquidity for the tokens. So when you buy something on the exchange, that dollar goes into the exchange, and then that dollar goes from the exchange to the market maker, and the market maker puts it in a big barrel of all the tokens he owns, and he hedges it across all tokens. So when you say hedging it, you could think of like if you take $100, all right, and you apply it to 7 different assets, ranked accordingly from 1 to 7 or whatever. Uh, Number one gets $20, next one gets $10, $5, etc., all the way down the line. So each dollar goes into that bucket and it hedges across all tokens. So if you put $1 into your crypto exchange or whatever, and you got $1 worth of Bitcoin, uh, in reality, it gets hedged across the market, and the hedge is also the risk that the maker takes to provide cash to the liquidity. So if you could think of you buy a token from, say, Coinbase. Coinbase sends that money over to State Street, and State Street provides the liquidity if you want to withdraw, or someone else wants to withdraw, or if somebody else buys, it just keeps going that way. So the job of the market maker is to stabilize the price and provide liquidity for people that withdraw from the market. So you can only imagine that when you take that and you expand it across the world, that there's a lot of dollars going in and a lot of dollars going out. So the lot of dollars going in and a lot of dollars going out is the price, and that's the candles that go up and down. Now the speed of which that cash is coming in and going out is called is the speed is could also be referred to as volatility or volume. Uh, the volume of money coming in. So if it's $1, $10 would be higher volume, $100 would be even a higher volume. And so that's what the candle represents. It represents on a time frame in 5 minutes, say, like the previous host chart was. He looked at 5 minute charts. It's how much money is going into that candle in 5 minutes and how much is going out. So it happens, the candle represents both in and out during the candle. So if it were $100 up and then $50 out, $100 up, now you're at $150 up on the candle. And then the candle resets itself again at the next minute mark. So that's when the close. So when you see open and close on your chart, the open is when the candlestick starts, close is when the candlestick closes, and then it restarts the candle from the exact same point of which the candle ended. And then you'll see wicks, and we'll go into that a little bit farther. So what crypto actually is it's a digital bearer asset. So the word digital, everybody should know. It's like digital is can't necessarily hold it in your hand, but it's a representation of something that the creator makes. So in this case, it's a digital representation of money. Now, bearer asset means, if you could go way back in time, there used to be what was called bearer bonds, and it's still kind of the same as a dollar bill. If you hold it, you don't. It's not a check or a credit card or anything else. If you hold the owner of the bearer asset, anybody has to take it for the value of that asset right then. It has no name on it or anything. It's just a representation of liquid cash, basically. So depending upon how you buy your digital assets, like if you leave them on the central exchange, say Coinbase, Kraken, or one of the exchanges, they sell you the token, and then they hold the token, and unless you want to move it into your own hand, such as a wallet or one of different type of holding that you want to hold it in, and then at that time you'll get a set of keys. So they're not accounts; they're private keys. So what crypto is it's two prime numbers. It's two prime numbers multiplied together to form a new number, and that new number is a public key. And then the person that created the key has the other key. When you combine the two, that's your private key, and that key can enable you to transfer it or sell it or whatever. So the encryption is when they multiply the two big prime numbers, and to create a new number, that's what makes it so hard to hack or whatever, manipulate that number. People can't easily guess it. It would take some astronomical amount of time for a supercomputer to try and break down that number back down to the original sets of numbers that were multiplied by each other. Uh, Once you hold those keys, you don't have to ask for permission or anything to hold or transfer it. It's all the rules are enforced by software, not by the institutions that are such as Coinbase. They can't change the rules on you. Uh, then if you want to move it, sell it, trade it, or whatever, it happens directly, not via intermediaries. So on a blockchain, you could think of which the token is built on a blockchain, and it's just basically a contract, and it's kind of elaborate. Like in Bitcoin's case, they mine. People will try and mine tokens. That's how the new tokens are brought into existence. Is that a bunch of computers will sit around and they try to hash out numbers. If they get the magic number, magic internet money, then they get the token at the price of the token, and then plus fees and this and that, how they distribute it. But nonetheless, it's a bunch of people running algorithms to try and hash out a number, and the longer the blockchain goes on, the harder it is to guess the number. So you have to put in a lot of resources to try on your computers to try and guess that number, which those resources are energy and a lot of things. That's why it's expensive to run a mining computer. It used to just be a computer back in the day, but now there's specific mining cards made, kind of like NVIDIA for the AI age, the same thing for the mining thing. And then so that's called mining for Bitcoin is different than how tokens are produced, say, on Ethereum. So on Bitcoin, it's called proof of work. So what that means is that when the Bitcoin is created, the network has confirmed that there was work put into mining that token through the algorithm hashing guessing game of some sort. It's pretty complicated. I don't even understand, but never mind. But I understand the simplicity of it. So the work is computers working together to solve this mathematical problem. The person that wins the mathematical solution gets the Bitcoin, or there's more proof of networks out there, but basically, uh, Bitcoin was the first to do the proof of network, and they're proof of work. Excuse me, proof of work. Then, so after a while, it came to find out to guess that number cost a lot of electricity because they're running so many mathematical computations uh, that take quite a bit of time to solve, which sucks up electricity. You build a bigger computer, use more electricity. Then a whole bunch of people are competing with you. Now a whole bunch of people are using big computers, eating up more electricity. So it becomes a taxation on energy also. So once that Bitcoin is mined, or the transaction hash is validated, then that person that mined it owns it. He could hold on to it. He could sell it or introduce it into the market uh, for for sale or whatever. It creates another Bitcoin, and then that'll change price. Uh, Price, you can't. Price is nothing anybody can. You can like guess at where it's going to go, uh, but you can know there is no price built into Bitcoin. Some of the myths are that it's always going to go up, but inside the Bitcoin smart contract or whatever, there is no time duration. There is no uh, monetary data points or anything at all. So it doesn't track time. It doesn't track money. It doesn't track a lot of the things that you think it does. It just is Bitcoin. It's a digital dollar. It doesn't have any tricks. It doesn't have, when I say tricks, that means like there's a use case. Certain crypto tokens have a use case, like it's meant to be a token to be used as a reward in video game, for instance. You play a video game, you want to buy something with it, you could earn tokens or whatever. So that token would have what's called a use case of some sort. Uh, a lot of tokens are use smart contracts to digitally author use case, such as everybody's probably heard of stable coins. So stable coin is just a liquid dollar or digital dollar, and its goal is its smart contract. All it does is rebalance it as people buy it and sell it, so that and all the fees are taken out, so that every second it's always stays at a dollar or within a decimal range of the dollar. Any super fluctuation in that dollar could cause it to liquidate, which if you go back into the early days of crypto, you remember the big exchanges like FTX and stuff, or just recently on October 10th, everybody remembers the big crash for crypto where $20+ billion got liquidated. It wasn't because everybody sold. It was because a stable token lost its peg and it went to below $1. And what happens is that because all the tokens on an exchange are based on dollars or stable coins, there is no bank account there. When you put your money in, it doesn't go into a Bitcoin bank, doesn't go into an Ethereum bank, it doesn't go anywhere into other than a bucket to hedge all tokens. So when that stable coin loses its value, it'll reprice all the tokens accordingly. It'll hedge across all the tokens. That's why you saw things like Sui going down to like 5 cents in a minute. So it was very systemic uh, issue that happened on one of the exchanges that caused the stable coin to depeg. And then once it starts liquidating, or the value going down below people that have positions, it'll liquidate that account, which will liquidate the next account, which creates a cascading event. And it happens so fast that the market makers were even locked out of trying to be able to rehedge their positions. So rehedging the position is just when the position is dropping, they could add assets to another one so that they don't take a loss. Uh, so the market in reality is the back end. The price is the back end of the people providing the liquidity to the exchanges that sold you the token. Uh, so that's kind of a little bit about price. And then the more important thing about crypto is the blockchain. We talked about Bitcoin and how it's proof of work, and the way the token is created is through mining, collective people mining and spending time, the work, and the energy to mint or mine a new token. So what the contract does is it's just the Bitcoin contract. It just waits there until it creates a number. It waits till somebody can guess that number, and then a bunch of uh, computers simultaneously try and run programs to guess that number, and then every so many minutes or so often in the contract, it will emit a Bitcoin, and that is a little bit time based. When I said there was no time, what I meant was there's no time like price for days or whatever, anything like that relative. But in blockchain, what happens is it has like a halving cycle. So when you first got awarded, when it first came out, say you mine a coin, you'd get 10 tokens each time you mined a token, and then every 4 years it would get less, and the next 4 years it would get less, and the next 4 years it would get less. Also, incrementally during each time it does that, the mathematical solution to guess that problem gets tougher. So every 4 years, you get less tokens, and the mathematical problem gets harder to guess, which increases its value of work over time. You have to put in more time and you get less, which scarcity equals value. So the longer the network goes on, the more work having to put it in, and the scarcer the reward is, should add value. Now, if you took away the United States dollar portion of this equation, you just have a digital representation of an asset that just gets harder to guess, and you get less of them, but there is no value to them. The value comes from the dollar and people speculating on what the price is going to be, and that's the traders, whatever, they're trying to guess that the price is going to go up or the price is going to go down. They're going to long it. When you long it, you're putting a bet in while it's low, hoping that it goes up, and you ride the momentum up. And when you're shorting it, you try to catch the price at the top and thinking that the price is going to go down. The farther the price goes down, there's some nuances there, but the farther the price goes down, the more money you're going to make riding the price down. So that collectively can drive prices. When a bunch of people FOMO in or get real excited about a price, you'll see that a lot of money comes in a similar fashion. Everybody's going short or everybody's going long on the asset, and that'll drive the candles up and down. But unlike your bank account, where you, well, actually very similar to your bank account, when you put your money in, it gets loaned out to other people, and the best and the best case is that you're able to, everybody's able to get their money out until you run into like any other financial institution where like, there's a systemic run on the money. Then they have to, everybody has to call each other and put all the money back in the basket. So it's the network effect of crypto, I guess we should talk about, is that so many people hold this token, or users hold this many tokens. The more users that hold the token on that network creates what's called network value. And it's kind of like the work from the mining the tokens. When you mine them, you're putting in the proof of work for the token. Well, the network value is like a bunch of people that own the token add value, perceived value to the token created by the network effect, meaning that if two people sell tokens, yet there's a million users, it doesn't drain the price. Whereas if you only had 10 users and 5 tokens are sold, obviously, the you know what I mean, the less people in the network, the less stable the price is. So the network effect is a lot of the stability of the price. But you got to remember that investors and stuff of crypto, they come in herds of people moving in contradictory directions. Like, I think it's going to go up, or it's going to do this, or it's going to do that, which is just it's just people's mentality of what it is. So Bitcoin, it's not a company, it's not a website, it's not a cloud, it's not inherently fast, and it's not free to use either. So when you buy a Bitcoin on the network, or you go to use a Bitcoin somewhere, or you go to use your Ethereum token somewhere, you're going to have to pay a fee to the network to transfer it, buy it, hedge it, long it, short it, loan it, whatever you want to do to it. It's going to create a, a fee, and that fee is going to be dependent usually upon how congested the network is. So the more people trying to use the network, the price goes up. Just makes sense. You know what I mean? The less people are using it, it incentivizes you with a lower price. Uh, so that's the proof of work network. And then we talked about the proof of work. So then there's Ethereum, which is a derivative. It was invented a few years after Bitcoin was invented, and they said that we're going to do proof of stake. So the difference between proof of work and proof of stake is proof of stake is that you have, very similar to mining it, you have people that run specifically Ethereum nodes, and as the more people that stake it, computers that stake it, very similar to the mine Bitcoin, it's going to mint Ethereum in every so many blocks or every block, and that gets distributed for equity across the people that are staking it. So if you just staked your Ethereum and you were running a staking node, you would earn Ethereum every time a block is or a block is completed and new Ethereum is put into the system. So you're still running a computer all the time, and you're staking uh, your asset to be provided basically interest on it or staking reward. Uh, it uses a lot less energy and it's a lot less evasive to uh, the fundamental structure of the network. So, so that's kind of we're going to go way more in depth into like single topics, and we'll start from the bottom as the episodes go by. This is kind of like just like a broad overview. Uh, so why the block exists is the transactions are grouped for efficiency. The blocks create ordering, and the ordering creates agreement, and the agreement creates finality. And then you can create transactions on the blockchain. So a transaction is just basically a signed message that says, I authorize this state of change, verified by math, not by trust. And then it's broadcast across all the chain, and it's not sent to a central server. So it's broadcast across the network. So a signed message or a state of change is, if you think of crypto is like an Excel sheet, and you buy a token and you're basically issued one cell on that Excel sheet. That cell in turn is also represents a number, and it also represents a value, and then it's encrypted. And so when you say you authorize a state of change, you're just saying that I authorize that Excel number to change positively or negatively depending upon the type of transaction. Once it's executed, that cell is encrypted. That's the trust part. There's no, you can't you can't break it, and then it's broadcast across the whole thing, so nobody can, you can't back up on that transaction. It's just a completed transaction. It's forever on the exchange or on the blockchain, and you could always go back to that by looking at the transaction hash and the crypto address. So uh, that's another thing. So addresses, you'll probably see that you have to. They made it a really super technical at first, which kind of like only the uh, only the people that knew were able to navigate anything but the exchanges with addresses and private keys and secret keys. And my opinion is that they made it a little bit more complex. But now it doesn't have to be so complex. They have what's called account abstraction, where you don't have to, where two parties can just sign a consent, and it'll uh, underneath the hood it just creates a wallet for the seller and the buyer, and then when the event happens, it's executed, and you don't have to have private keys and all that stuff. So has been made easy, not for Bitcoin, but for Ethereum. So Ethereum's, like we said, a proof of stake blockchain. It's also a blockchain that introduces smart contracts, or uh, digital way of what would you say, programmable money. Whereas Bitcoin, you can't program it, whereas the Ethereum tokens, not the tokens themselves, but you can create new financial instruments using coding, and then it runs on the Ethereum rails. So most all networks, everybody can't have their own Bitcoin network, just because you could create your own level one blockchain, but that doesn't mean everybody's going to use it. It doesn't mean it's going to have value. You can put your own money into it to hold value, but you need more people. So there's Bitcoin, and then there's Ethereum, which introduced smart contracts, and that has basically spawned all these other networks, very similar. Some of them have different ways of writing their smart contracts, uh, such as Solana and Sui, and you name it. All the ones that are proof of stake will be very similar. They'll have smart contracts. But what happens to those smart contracts is just like I said about if you invented your own Bitcoin, it has no value until it gains enough people on the network to stabilize the value. So what people realized over time was that they're building all these different token protocols, and you'll see them everywhere. There's like I said, there's like Solana, XRP. The list goes on. I mean, in theory, the last time I checked, there was 20.3 million different protocols. That's not tokens. That's just protocols. The protocol would be Solana is a protocol. Ethereum's a protocol. So you're looking at a huge amount. Now, you don't see them all show up on your list at the exchange or whatever, but they're there. And some of them are meme coins or whatever. Something that are scam tokens or whatever. So when you buy a token, it's really good to understand what you bought. It's not. It's only as good as the smart contract or the use case that it provides. Back in the old days, they would make the meme tokens, which had very little programming in it, and it just basically all it was there was to catch money, and then it was speculative. As the price rose, people would try to jump in, and it creates like a mass rush, and then a mass exodus from that token. That's why you see the price goes up and down. The people that buy it at the low get out the top, or the winners. Everybody else makes some money, or some people lose a lot of money. But the underlying factor is the smart contract. So some of them can be programmed to take certain fees, uh, do certain reactions uh, during the time of the contracts being executed. Uh, so back in the day, when you're making tokens, like everybody wanted to get the new token protocol a couple years ago, and they would just sit there on the internet and wait for new tokens to be introduced, and they would jump right in them, and it would cause the price to bubble right up, and then other people would see it and they're like, "Oh, the new token, let's get in, let's buy it," and then the early buyers are just waiting for the money to come in, and then once they sense the top, or when they want to, they just sell everything, and now the price just goes right back down. You bought in kind of high, so now your token's worth a lot less. It's hard for you to sell off your token. You got to be what's called a bag holder. Hold that bag of tokens until the price comes back into your entry, or take a loss, one of the two. So that's kind of was a trick for a long time. Now they're trying to put a lot of real use case to it, and a lot of integration with our existing financial system, with the Clarity Act, and some Stablecoin Act, and a bunch of legislation that kind of tries to legalize it or bring it up to equal par with the banking and the stock market. And there's ETF funds now, and it's worldwide. It's not just here in America. Obviously, crypto is across the whole world. If you have a computer, wherever you're at, you can access your token and trade it, assuming that there's liquidity in it. If you have some old token in your wallet that went to zero, it's still worth zero. Uh, there's nothing you can really do about it. So most of these ones that networks you see now, you'll notice that they have their own smart contracts and their own tokens, uh, like a Solana token or XRP or whatever. I'm just picking names. I don't have a particular favorite. I'm not even a particular buyer of crypto tokens. What I am is I'm a believer in the smart contracts, the programmable money, the programmable financial instruments that you can create that can do useful cases in the real world. So we'll go over that. Been to college for programming, so I program in the language of tokens, which is Solidity, which is Ethereum based language. But each one of these, a lot of these tokens, they'll have their own languages, coding languages like Golang or Rust or whatever, or they'll create their own language just to be unique. But the problem of being unique is that it's not compatible with everybody else. So uh, what's happened over time is everybody will still have their own programming language, but they put a section of that language so that it commingles across the popular languages, which I'll just be frank with you, Ethereum or Solidity is the financial smart contract language originator and the leader in all respects. So what everybody's done to share in that is that they made all their networks compatible with the Ethereum. So when I say compatible, you'll hear terms like EVM, which is called the Ethereum virtual machine, and that allows other networks to share in the network effects of Ethereum. So if you create your own blockchain, and we'll call it XRZ or whatever, and you have your own language and you only have so many users, if you offer all your users or your language to create tokens to ride also on the same compatibility that Ethereum does, that's called the Ethereum virtual machine. And the Ethereum founders made this so that anybody that spawns up all these different tokens or whatever can share in the network effect with Ethereum. And also, network effect provides security. Also, it makes it more resistant to people trying to hack that computer or to steal the funds. And I'm sure everybody's heard of these hackers. They're real good, and they can drain millions, if not billions, of money overnight, and you won't know what the heck happened to you until all of a sudden there it is, it's gone. Uh, and that that is less likely on bigger networks. The security of when they're staking is that everybody's making a copy of the Excel sheet every time a new token is minted, or every transaction that happens gets added to that Excel sheet, and then the next person to validate that Excel sheet has to validate all that information plus the new information, and it just goes on that way forever until somebody disagrees. And when they disagree, it gets resolved with a resolver, and if as long as everybody agrees to disagree, then it just gets that one gets thrown out, and they just keep on the agreeing program that the Excel sheet is the same as it was from this transaction to the next transaction to the next one. If too many people disagree, then you could split the network somehow to the people that believe and the people that don't believe. Like when Ethereum had its network, and there still is an Ethereum network that is proof of work that still exists when they split up, and then there's the Ethereum proof of stake, which everybody seemed to adopt. But there was a chance at that one time when they split that I believe this, you believe that, and how many people are going to come out the winners? Well, the Ethereum proof of stake ended up to be the winner. So, uh, so why does so? Let's talk about price more, because it seems like that's the biggest point to people is what what's, and I've always used the word Bitcoin, and being honest with you, I've never bought a Bitcoin, and I don't think I ever will buy a Bitcoin. But it's a representation of liquidity or price, uh, and that is very subject to the person's beliefs and hope or or not hope. You know what I mean? So it's not a great way if you're trading. It's okay for a long term investment idea that I think price will go up over time. I'll invest my money in it and wait time. But if you're impatient, that's where the problem goes. And the people that are providing the trading liquidity, they're banking on people being hesitant, uh, FOMO, or reacting to price instead of allowing price to discover on its own. Uh, so if it were just like a Bitcoin token, which has no purpose, uh, it's just it's the money going in and out. Will set the price for you. But like on Ethereum or smart contracts, you need to look at the smart contract to understand the underlying risks of what you just bought. Because it's the smart contracts, they're just like any other legal contract. They're going to execute so many lines, and there could be some verbiage in there on that smart contract that's not beneficial to what you thought you bought. Like a certain thing happens over duration or whatever, and it forces the token, uh, the amount of tokens in play to go up or down, and then that in itself causes price to go up and down. Uh, but so what crypto, it doesn't solve human greed, or like somebody writes a bad smart contract, or bad use case incentives. It doesn't solve speculation bubbles, and it's poor risk management. Quite frankly, uh, certain things affect price, like scarcity. Like Bitcoin only has 21 million, so the less that are available, uh, the more valuable it is. So you have to think that when for every token bought, one is sold. For every token sold, there has to be a buyer. If there's not, if you're selling your token and there is no, you have your $100 token, you want to sell it for $100, then uh, hopefully there's a buyer that'll buy it for $100. But if there's not a buyer at $100, the price will step down. So you say, I want to sell my $100 token, and there's no buyer. Now it's $99. And that's called price discovery. It'll keep going down until a buyer steps in to buy your sold token. Uh, so that's sometimes why you'll see that the price will gap up and down real fast, is because the price is at $100, but nobody's stepping in to buy it. So it'll get hedged down and down and down and down until somebody steps in and buys it. And that'll create the floor, and the price, the candle will start to move up again. Uh, let's see here. Uh, so that's kind of like the overview, kind of a little bit of the difference between token and blockchain. And blockchains creates smart contracts, and some blockchains don't do anything. They just exist. The only mechanic they really have in is the distribution of the asset when it gets mined, and the complexity it is to mine it. The harder it is to dig up that token, the more you get rewarded, or the incentive is to keep mining more tokens. Uh, so what I got into crypto, I did the Dogecoin and all that. I believed in the tokens, but it was my wanting to understand what happens to your dollar once you buy that token, and where does that dollar go? And that was the rabbit hole that I went down. And I bought scam tokens. I got fished. I got wrecked. Whatever you want to call it. And I made a couple bucks here and there. But mostly what I didn't understand was what the heck is happening here. It just seemed like it was magic or whatever, and I would just one little piece of understanding at a time. Uh, I mean, it all starts out with greed. It's human greed. kind of pushes things. And the people that are hosting these exchanges and providing the liquidity, they have a firm understanding of the human nature. They've been trading markets and stocks and stuff for way before crypto was crypto. Uh, so they understand how people react. And then one of the best ways is turn on your exchange in one screen, okay, and then turn on the news in the other screen, and watch your price go up and down depending upon what the TV news guy says to you. If he says, "Oh, we're going to go to war," or whatever, then what happens is the price will move on narrative. Uh, Whether it's true or not. That's the worst case part about it, is whether the news is true or not, the price is going to move. Once the truth is realized, it'll stabilize or may continue. But price movement doesn't is not based on truth or false truth either. It just reacts. And when you collectively have this much money in the market across every state, every country, every nation, across the world, you have this big, huge thing of money. And the market makers work very similar to the stock market. They put all the money in a bucket and they hedge it across all tokens. And then as certain things go up and down, their computers run algorithmic de-risking and risking, uh, buy and sell to stabilize the market. And sometimes they are greedy also, just like we are, and they will buy and sell tokens to force the price up and down, and they'll liquidate people and up and down the up the price and down the price, long and shorts. They'll liquidate it. I understand why. It's greed, uh, and it's mostly the people's not understanding what's happening after you buy that token. I mean, when you think about it, there is no token. I mean, nobody has a Bitcoin token. Uh, so you're relying upon the software below that transaction. How much do you trust that investment that's going to be ran on a code, basically? So that's what led me into learning how to understand the Ethereum for sure, and through Solidity. And they're all open source contracts where you can actually go and look at Ethereum's base smart contract, and you can dissect it and learn and understand how it works and how it provides the proof of stake and the value to it, the value of the network. Then you can create your own smart contracts on there by using Solidity to write a code that represents some type of financial or speculative, or it can represent that smart contract can represent a house, it can represent a car, it can represent a school, it can represent a vacation fund. I mean, it can represent so much, which really makes it super cool. And that's what we're going to really go into a lot more, because crypto is what you see on the outside, but it's what runs under the rail. Uh, Certain crypto that doesn't have the smart contracts we talked about are just pure speculative. It has no uh, 4-year cycle. It has none. That's just people's predetermined idea that if they see price go down for X amount of time, they're going to say, "Oh, it's crypto winter every 4 years." Whereas the only thing that Bitcoin has in it is every 4 years it reduces the output of the token. It doesn't go into any cycle. I mean, if anything, the blockchain or tokens follow the typical financial or liquidity or business cycle, which is very similar to the 4 years. But as you can see right now in the market, that Bitcoin is not reacting the way that everybody said it's how it reacts every 4 years. It's now in the fifth year. Price is kind of stable, but it's following the macro environment and the financial markets. For the longest time, it wasn't recognized by the stock market, so The people that invented Bitcoin for years and years and years, they've just been uh, trying to get recognition and acceptance by the governments, by the stock markets, the market makers. So now it's super close, and they created ETFs to hold, retirement grade investments, and Wall Street holds these big, huge funds of it. But everything that they wanted to be accepted, and they wanted to be the new dollar and the new gold or whatever, all what actually ended up happening is it just became a liquidity play for the stock market. So when you buy and sell a stock, you can't. In Bitcoin, I can buy a Bitcoin, sell a Bitcoin all in 1 minute, the same Bitcoin. In the stock market, you can't do that. If you buy a stock and you sell it, you have to wait so much time before you can buy it again. That's called wash trading. So a lot of the people in the stock market, they'll use that liquidity in Bitcoin, which is cash, to hedge their positions in and out of the stock market while protecting their stock investment. So if they need to de-risk or add risk, they'll use Bitcoin. It's basically a digital dollar to hedge their market position in stocks. Where stocks you can hold in your hand, they also represent money. It's very similar, except for and it's a very similar market. And it's actually ran by the same people. So the Bitcoin people thought they were super smart and made a digital gold, but one thing I don't think they really thought out was the people that provide liquidity and build stocks and financial instruments, financial notes, bonds, assets, all that different stuff. They're a tad bit smarter. So the adoption of Bitcoin might not have been the best thing in the world for them to to desire, because that's exactly what they got, and it's not exactly what the intention of being adopted isn't exactly the life that they wanted to see. However, regulations have come along now, and it's gaining traction. They got the stable coin bill, which means that the stable coin is just basically a dollar. It's just a digital dollar, and it's pegged to the dollar. It's got a program that just goes up and down, trying to stabilize itself from 0.9999 to 0.998 to 1.0001, and it's always pegging itself to the dollar. So it's always worth a dollar. And then a bunch of people have developed their own stable coin, and the government put out a law that says, well, if you make a stable coin, it's only right that a single stable coin is equal to $1 or cash equivalent, such as a treasury bill. So they put a law. Finally, they put a law in saying that now this only applies to the stable coins. It doesn't apply to your Bitcoin. It doesn't apply to your Ethereum. It only applies to the liquidity layer of the blockchain, and that's stable coins. Like we said at the very start, there is no bank, there is no fund, there is nothing that carries cash in any part of crypto. None. There's no FDIC. There's no protection. Uh, it doesn't even go into to the. It just goes into when you buy a Bitcoin, it settles you put your cash in from your exchange. That cash turns into a stable coin immediately. So it turns in cash from your bank into a stable coin, USDC, USDE, whatever stable coin there is. Then you can buy Bitcoin with it, which just basically exchanges your stable coin for a Bitcoin. And uh, so it's just basically adding USD value. That's why you'll see when you look at the exchanges, you always see on the ticker symbol say BTC USD, because it's priced in USD. It's Bitcoin priced in dollars, or Ethereum or Solana based in dollars. Um, I've never traveled the world, but I'm sure in other countries it's the same thing. Also, some of them might be priced in yen or whatever. But here in America, it's Bitcoin represented by dollars. So there's so many. Those dollars are mandated by the government. After all that collapsing of different exchanges and the liquidation, they finally came up with the stablecoin bill that says if you build a stablecoin, you have to have X amount of liquidity in your company. So you can't have just everybody creating a stable coin. So you have to have a qualifying amount, and then you could mint these stable tokens, but they have to be backed by real dollars. They can't be backed by magic like they always were. They were before stable coins. Everything was backed by magic or speculation. Stable coins have been around for a long time, but there was only like one, uh, and it was the foundation of which Bitcoin was liquid from. So the liquidity drives the token market. But we'll do so a lot of talking about, they got the upcoming bill that is supposed to be the market structure bill, and it kind of solves some of the things that stablecoin bill didn't solve, and that's the structure of the decentralized exchanging, the lending, the fractalization, the you'll hear a lot of keywords on the in financial now. They'll talk about real world assets, tokenization, fractalization, and different ways that you can represent an asset, which is going to revolutionize the entire financial markets. And right now, many of the big banks and the trading platforms are already building that. You hear of like BlackRock; they're really big into the tokenization of assets and or the real world assets. So those are two different things. So a real world asset is, take for instance, it's a car. It's a real world asset, and you want to put it in, digitalize it, all right, and then sell it. You would come up with the collateral, which would be the car, and you'd have to have the proof of collateral. That's one of the biggest things for RW. You have the proof of collateral. Somebody owns it. They verify that it's owned, and then they can turn it into a digital representation of that asset, and then it'll have a digital representation of the market value. Now you could say initially that I put in enough collateral, the car's worth 10,000, but once you put it onto the open market, then the open market is going to decide the price, even though it has a base value that you validated. So the key to the RWA, it has to be collateralized, validated proof of asset. Then there's a fractionalization of an asset, which is you take that car and and its value, say it's worth $1,000, and you divide it into 10 pieces. Then you can sell 10 pieces of cars to 10 different people if you wanted to, and 10 different people will own a percentage of that car. That would be fractionalization, or tokenization is very similar. For fractionalization will add a value. Tokenization just divides it. Then the market will start out as whatever the verified value is that before you digitized it. So they're already doing stocks and bonds and digitizing them into tokenized. When you think of a stock, it's like you buy GE. So one stock, all right, may hold a bunch of shares. Each share you could think of as tokenized, basically. So each share would be no different than a tokenized or share of an asset, an overall big piece that's just split up into mini pieces. Each piece will have a value. Uh, some of those assets you could divide even more later on. Some of them you can never divide again. The set number of times you can divide it is capped, or it's open. Uh, and then there's the way those people make money that are selling it is they're charging little fees along the way, and then it takes time. And so what digital assets does is it cuts back on the fees and reduces the friction of the time. The friction of money moving allows money to move faster and cheaper across the world instantly. The settlement is, and that's kind of why the whole financial revolution of moving things onto the blockchain is coming. Now, what they're not going to be moving what's not going to be moving on to the S&P and stuff are things like Bitcoin, because it's just a liquidity. It's just like, basically you could think of it as like a dollar, a digital dollar in theory, but it doesn't have any underlying rails to run financial instruments. Say you wanted to create an ETF or whatever, you could do that with making a contract that represents an ETF and has all the same similarities to an ETF, and it's just a digitized version of it. So that's what Wall Street's doing now, and Security Exchange Commission's kind of mandated them that everything needs to be brought up to the digital world, like we all have, like, you know, back before computers, we had books or whatever. So progressively, technology changes, and the digital assets have been around long enough now, and they're better than the way the stock market operates currently. They do use computers in the stock market, and digital dollar isn't something new. It's basically when you're buying something online, anywhere you're buying it, it's a digital dollar. It's just a digital transaction that's trading the dollar from here to there. So the S&P is going to be brought into the smart contract progression or whatever, and they're going to put all their assets, they're going to tokenize them, or they'll just use the real world asset. And they've got pretty grand plans. If you can imagine, anything that has value in life can be turned into a smart contract and then divided if you wanted to, shared if you wanted to, uh, and then traded. Now, what separates the Wall Street from us is that they don't. I mean, you've seen the day back when everybody had their tickers. Hey, sell, 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 and you see all the paper moving. Well, now nobody's. There are no people that do that. There's brokers or whatever that they'll move big transactions. But mostly, it's a computer, and that computer is beyond sophisticated, and it's called the algo. And the algo represents the buyers and sellers together, and they can move price to hedge their risks instantaneously before anybody can come in and say, "Oh, price is going up, buy, buy." The algorithm works so fast, and it reacts on so many weird things. Like, say the president says something economic, economically significant, that may cause people to panic, sell, and buy, and just on the drop of the president's word, the computer will sense it, and it'll de-risk or risk across all of its assets as other people's brains are trying to process what's happening here. Oh, that's a great buy. By the time you even think that, the computer has gone across all the assets: buy, sell, 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 buy. That kind of thing, like instantaneously. And it's not just one computer; it's every it's J.P. Morgan, it's Chase, it's Bank of America, it's all these financial giants across the world. It's sovereign wealth nations. They are all doing it. The markets are all doing it at the same time. That's why you can't. I mean, you can get in and that's speculation, or there's what's called insider information, where somebody knows what's going to happen in the future, and they bet knowing the outcome of the future. It's kind of shady, and it's kind of like you're not supposed to do that, but it still happens everywhere. It's especially in the crypto market. The people, once you put that money into the exchange, and the exchange sends it to the liquidity provider, the market maker, the exchange and the market maker, they're in cahoots. You know what I mean? The only person not in cahoots is you. So you're speculating that everything's going to be fair and everything price is going to go up, but it's it's highly risky, and it's highly rewarding if you catch it right. But it's if you've ever been to the casino, how many times you drop a nickel into the slot machine, the odds are not exactly on your side. Now you'll win. If you lost all the time, the casino would shut down. It's just common sense. So even though everything's like a computer program, there are people behind it. Believe it or not, they say that like Bitcoin has no owner. It's like decentralized or whatever. That is a little bit of BS. It's not decentralized. It's got a huge amount of developers that work on it, that hold the token, that are miners. They all can affect the price. They don't have to sell their tokens into the market if they don't want to. Every time they mine it, they can hold back from the market, creating more scarcity, which will drive price up. Or they could sell it all at once and drop the market. So there's a huge human element involved in crypto. So when they say decentralized, no owner, no, no, it's fully integrated with same type of people as you and I. Some have different technical skills and different ways to program it to pro, programmatically make themselves money. There's so many ways. It's just like it's hard to comprehend. So, like I said, I got really into building smart contracts, and then AI came out, and once AI came out, I decided that, hey, what's the computer language that builds AI, and that's Python. So that's the underlying language that all AIs understand. It's their common language. Like I speak English, some people speak Spanish. AI agents, they speak Python. And in blockchain, I speak English. Blockchain, it speaks Ethereum for me. You know what I mean? There's other languages out there, and a lot of third-party languages, and this and that. It's like, to me, it's too many. You know what I mean? Most people, I mean, everything's trying to make a buck if you think about it. In the bottom end, you're trying to make. You're not. I mean, I do a lot of fun things for that I just do for my own, not trying to make money. And I've built a bunch of different tokens, and I've built ecosystems and DeFi products and financial instruments and tokenized and real world assets. All of them are as good as the money you want to invest in it and the network that you can develop, or the amount of people that you can push that network effect to create value. Uh, but the smart contract is going to be the base of a lot of the conversation, because you really can use the smart contract to make value, represent your assets, to transfer your assets between other users, family, or whatever. And they can hold the value, not speculative, but if you had an automobile or whatever, and you sold it to somebody using a smart contract, it's not going to move up and down in market price. It'll move up and down in market price according to what autos are sold for, but not necessarily for what crypto is sold for. Uh, so it'll have a different type of speculative value, or depreciating as an asset would be, or if you tokenize gold, it would be the same thing as gold is. It would work on the market sets the value. You and I set the value by buying it in and out, and then a bunch of people behind us screw the screws in on it, if you want to say. So you could call it manipulation, but in reality, it's just people trying to make money. You know what I mean? And you have to be the smarter cookie on the other end. But they're counting on people buying this stuff as, you're not the smarter cookie, we're the smarter person. So that's the buyer beware portion of it. But the other portion of it that's real is the smart contracts, and we're going to get into that, and I'll go over some of that, because uh, it's super fascinating what you can do. And then the best part is the AI portion of it. So if you're developing blockchains and smart contracts and stuff, then if you can think of that, the dollar is a digital representation of money, then AI is the digital user that can route that money and create different products or values with that money. Whereas I can't put a digital dollar in my hand and take it to my neighbor. I just can't. Whereas the AI, artificial intelligence, or I'm going to kind of like always refer back to an agent, and an agent can take that money and take it to my neighbor in its hand from back to forth. Whereas when I put the digital dollar in my hand, it goes through it like water does. You know what I mean? All of a sudden, there's nothing in your hand, obviously. But an agent, it stays in their hand, and they can move along these networks and provide all kinds of transactions based on the running on the smart contract or the blockchain rails. They can trade stocks. They can, I'm sure everybody watches the news. They can book reservations. They can buy groceries. They can make phone calls. Mine, it looks for, it logs onto LinkedIn every day and just rolls through a bunch of filters and applies to a bunch of jobs. So I do programming, I do coding, but I'm an engineer by trade. So I've always done energy distribution and energy storage design as an engineer. So this kind of crypto, or at least the base layer, or the under the hood portion of the coding of crypto makes sense to me, and it was easy to understand. And so after doing this, the solidity and learning the tokens and tokenomics and how to deploy it, and how to do all the capital portion of it, the pools. There's a bunch of different names for there's a bunch of different names for liquidity when it comes to crypto. They're going to call it liquidity pools. There's just 100 different names that they're going to use. All of them are basically the same. So if you're going to launch a token, the token's worth zero until you put money into it. So if you put it into a pool of money, then people could add to the pool or take from the pool, and that pool collectively would represent a token, and the pool would represent a basket of people, investors, that are providing liquidity to that token. And when speculation comes and people start trading it, buying and selling it, then it changes not only the token count but the value, depending upon how many are bought and sold, and that value is programmed inside that pool will reallocate token to cash. You know what I mean? So you got one token, one cash. You sell 10. Now you got, depending upon the value, it'll be like zero 0.9 token and zero 0.6 cash now. So there's a mathematical correlation to that, and it's constantly rebalancing that pool, and then reposting the value of that token. So it's super speculative, and it's not easy to price. But using AI, you can create. I've created things that can monitor the technicals, like our previous hosts. They talk about the technicals, how candles move. It's got predictive patterns or whatever that you can gauge that historically produce results that have predictively over time been true or whatever. So if the market, got two candles up that are red, and then one green candle up or whatever, once it creates certain patterns, people can recognize those patterns and project price. So technicalities are super cool. The one I created an agent that works on what's called momentum trading, and that's just basically taking the history of price to create a projection on what the market's going to do next. And then you can use technicals, which are certain technical pieces you can add to that chart that can help you better understand price. It's just a more educated way of gauging what I like to call short-term price, because in crypto, long-term price is hard to project. Like, everybody obviously wants it to go up, but believe it or not, there's probably more money made in the people that want to see the price go down than they want to see it go up, because you can make money either way you want. If the price is going up, you can long it, or you can buy single tokens and hope the trend goes in your favor. Or you could buy single tokens and then short the price, hoping the price goes down, and write it down. So you can win either way. It's kind of you can also leverage. That's one of the biggest problems with crypto and stocks, is what's called leveraging. That's taking a dollar to a bank and saying, "Hey, I got $1. Will you loan me 10?" They loan you 10, and then they say, "Well, you gotta pay it back at a certain time," and then you go buy Bitcoin, all right, for $5, all right, and it starts going up, but then all of a sudden the price changes and it goes down below your $5 level. Now you can't pay the bank back, and that's what's called liquidation. Or the opposite is you take the money they loaned you, buy even more Bitcoin, and the price goes up. You can sift off the profit and repay your loan, which is the leverage, and be okay. Uh, so it's very. I wouldn't recommend it to anybody, but it's a way to accelerate how much money you can win or lose, and you can do the same thing. You can leverage it down, like borrow $10 or have $10, use it as collateral to get a loan for $100 to bet on the price going down, and your $10 bet represents $100 worth of assets now. So it's real. You would make all that money, assuming that the it doesn't price doesn't drive back up and liquidate your short. Now the market makers, they control the flow of that liquidity. So when they see a bunch of people jumping in to short the price, and they control the liquidity, they let people pile in, and as the price drives down, they can put their own money in to drive the price back up. And as that price goes up, it starts liquidating the people that owe the bank money incrementally all the way up. That's called a short squeeze. Uh, so everybody's trying to, they can see how much money is coming into the market as you're betting that it's going to go down. And once it gets to a certain point, you could look on the liquidation heat maps, and we'll go over that in time. There's certain indicators and platforms out there that help you track some of this metadata that's coming. But you can think that this is basically one guy that sits there on a computer and says, all right, looks like everybody's bought. Now we rack the price back up. And how do you rack the price back up? They're the people that control the liquidity. They just put their own money into it, $100 million or whatever, and price just rockets up. And what happens is everybody that was betting on it going down on leverage, as the price goes up, it just ding, 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 ding. Their accounts are wiped out. In the stock market, it's called a margin call or liquidation. In crypto, in the stock market, they give you time or whatever. They'll make a phone call. You're about to get liquidated. In the crypto market, you just get liquidated. Uh, no phone call. You're supposed to be smart enough to watch your asset. You know what I mean? But if you're at work or you're not paying attention, so the best thing to do when you're trading crypto tokens is have no emotion or whatever, no bias that it's going to go up or down. Invest it and just watch it. You just got to watch it, and then if you're feels too risky, get out. If you feel more speculative that's going to go up, then stay in. It's all a personal decision, and it's only based on your money, your lifestyle, your thoughts. Unless you speak to a professional asset manager of some sort that could advise you somehow of so, but that's between you and them. I'm just trying to explain kind of how it works, and mostly we'll go into smart contracts and blockchain in the future so that we understand the smart contracts that run it and what's coming in life. It's what's coming is where the value in crypto or blockchain is. That it's the future of financial markets. It's the future of the stock market. It's the future of bonds. It's the future of government notes. It's the future of sovereign wealth funds. It's all going to be, everything's going to become digitized, just like there are. There's still books, but when computers came out, computers started like digitizing books, and then you used to have mail, stamps. Now you got email. It's just the progression of technology. Money is going to be digitized. Uh, the dollar, in my opinion, it's going to be very little of them in your hand anymore. It's going to be when you log onto your bank and you go to Walmart and stuff. I mean, how many? Not everybody's pulling dollars out of their pocket. They're just swiping their card. That's just a digital dollar going across the wire. Uh, and it just, same with it's just an Excel sheet. It subtracts your adds value to your account, and it's all done. In reality, a bunch of physical dollars never traded hands at all. Nobody settles in that. So you'll go to the ATM and get dollars to do certain transactions, but the banks overnight and stuff, they don't ship off bags of dollars anymore. It just changes the balances from each day electronically. So everything's going to become that way. It's going to be. I'm not going to. I can't project when, but it's in motion. It's been in motion for a while. The biggest players on Wall Street are creating stable tokens, and they're creating tokenized assets and tokenized stocks. You can already buy them on platforms like Robinhood, and I think Coinbase is doing it soon, and Kraken. You can get you can buy your Apple stock, and it'll just be a tokenized representation of the same stock that you would buy on the stock market. Its price will move at the same tempo and price as what it does on the actual S&P, or the actual Wall Street or whatever. It's just a tokenized representative. Back in the day when they would sell you a stock, you would actually get a share. It would be like on a piece of paper. They'd mail it to you. You'd have shares, almost like we talked about the bearer bond. It's like a dollar or stock. It was printed on paper. Now it's just printed on a spreadsheet on your computer. And then you have to be able to trust the person that's selling it, and that's what the blockchain does. Is it eliminates. It's a proof of trust. It's a proof of truth, so you don't get scammed or whatever. So whereas before, if you bought something that you didn't hold in your hand, you had to trust that the other person was going to deliver the hard good to you. So uh, that's kind of what the settlement layer of the blockchain is. Is that it's a proof of truth, or a proof of trust. Proof of trust. Excuse me. Uh, so. And then the AI is a big part of this. You hear about AI and all these things, all these big companies. Everybody's into AI, and what does it do? It's not meant to make AI slop artwork. That's not exactly what the intention of AI is. I mean, a better intention is, it's just like Google search, but it can search and tell you anything. So if you want to bake a cake or whatever, I mean, it works great in what's called the prompting, or the chat GPT, or the prompt in information. But what it really does is it's a workhorse. I'm telling you, it's an unbelievable workhorse for research and for coding and for making real businesses and contracts and anything you can think of that can be done that doesn't involve you using your hands to shape it and mold it, or requires a physical hand, can be done by an AI agent. So I mean, I've built an AI agent that can trade 3,000 individual transactions on Coinbase without getting flagged. It's like logging on to Bank of America and somebody just letting you run amok on their freaking bank instruments. So there's some high trust, and that trust comes through the smart contract and the agent oversees the trading. An agent can project price volatility. It can any kind of technical thing that you want to. The agent can oversee it and trade it and react upon it in real time, just like the algorithms that run the stock market. It's the same thing. Uh, so there's a lot of hype to crypto, and that hype comes and goes. Like they call the hype, sometimes it's called retail, and different than institutional. So there's a retail trader, and then there's institutional trader. Institutional people have been in the game for a long time. They trade their own money, but everybody kind of relies on. I mean, big surges in stock and crypto prices come in from the retail investor, and that's usually hype driven. Like something new comes out or whatever, everybody wants to get in on it, or the next governmental upgrade to fundamentals of the regulations that regulate it. They loosen the regulations. It becomes more fluid. It becomes more mainstream and adopted. I mean, that's one thing I can say. I mean, it's mainstream across the world and it's adopted across the world. Not everybody. There's a lot of bad actors from in the past that's kind of put a bad name on it, and there's uh, and those big bad actors got addressed, but it only multiplied the bad actors by 10, and the technology has only multiplied the technology of aiding the bad actor by incremental amount also. So you always got to realize is what's behind in the background than what you see, and what people see is a price, and that price psychologically these people understand price creates behavior. When you're losing money, you react in a certain way, and when you're winning a bunch of money, you react in a different way also. I mean, everybody's going to react different. Everybody has a risk. Like I can lose $10 or I can lose $40 million. So it's an appetite for risk. But just looking at the price is what we want to control. You know what I mean? Is it's not magic. It doesn't. It's buyers and sellers stepping in and people risking their money to provide the liquidity to back up that trade. And so they're the people that are providing that liquidity. They're evaluating the risk just like you are when you buy or sell it. You're like same thing. So it's like two different layers that are working on fear and greed, risk and de-risk. Then an outside thing, which is the macro or the narrative, that can spike or up and down that price just on the basis of news. Like we said, it doesn't have to be truthful news. If I told you that Russia wins the war against Ukraine, the markets would move. Everybody would be, oh yeah, the war is over, and let's reinvest into oil and this and that. Now that doesn't have to be truthful news. It just has to be news, because the price doesn't have time to understand truth. It doesn't, nor does it care what truth. Price doesn't care what the truth is. Uh, it just cares what the momentum of the investor is. You know what I mean? Everybody's going to buy or sell. So sometimes fake news, you'll hear fake news, whatever. That can equally affect the market. Like when somebody came out and said Cursor app is not helping Microsoft or whatever. Now, the news wasn't true, but Microsoft price just went tank, just like that. And then once the truth comes out, then it can hit the floor. Or even if it hits the floor, it's not going to rebound back up to the old price. You'll have to build new trust in that of some sort. I mean, you're going to have to trust the price. But it's just a price. It's like a dice. You roll it. You don't know what number it's going to land on, you know? So it's better to understand the underlying factors or what's called the fundamentals of your asset, and understand the technicals of the market. So each asset will have its own fundamental of how it's built, and then there's the technicals of how does that fundamental react on the open market. Because open market is just, I mean, it goes way back to trading pebbles for bread. You know what I mean? So it's going to be a perceived value. I have I have two pebbles worth, a slice of bread. And then tomorrow the guy says, oh no, that's 3 tokens. So you don't have to pay it. And then he tells the next guy 3 tokens and they don't pay it. So the next day he wakes up, he's like, oh, I better put the price of bread back to 2 tokens or two whatever pebbles. So that's kind of how that works. There's going to be a buyer and a seller, or supply and demand. Now, obviously, like in Bitcoin's case, there's scarcity. Once you have no more pebbles to sell, then assuming that everybody still wants pebbles, they're going to pay more because it requires somebody to sell one, whereas they just can't go to the beach and pick another pebble up, like a shell or whatever, and sell it. So the supply and demand factor is there to an extent. The scarcity, like gold, you'll see Bitcoin perceives scarcity. It's hard to say. It's mostly speculative. So Uh, so that's a lot of information in a short amount of time. Uh, but I think moving forward, we're always going to keep crypto in mind because is what's called the narrative and the projects they create and you'll see everybody's all these blockchains or decentralized exchanges, the liquid markets. You'll see all these things that are created to drive narrative and to drive demand from retail to get in that project to invest in their product or whatever. So it's us that we're going to be the smart person and try to understand where the value is and what the product is uh, to see what the perceived value is. Uh, but I still see that the values in the underlying mechanics, the contracts that the assets move on, more so than the asset itself. Like they say, if you go way back into like mining gold in the 1800s, very few people made money from mining gold, whereas a lot of people made a lot of money from selling picks, shovels, Levi's, the things to support the miners. Not every miner found a big nugget of gold, uh, but everybody needed a pick and an axe and Levi's or whatever. So it's the same with crypto. The money's not going to be in the token. The token is just like Ethereum's case. It's used for to pay the gas to create the transaction. The money's in the rails. How many, or the network effect? How many adopting financial instruments are going to run on that blockchain? And right now, it's like you can listen to whatever you want, but Ethereum is it's not my pick. It just happens to be reality. That's what everybody's building on, and it's not like they're going to unbuild and switch over to another blockchain. I don't want to really use names, but there's tons of blockchains out there, and they all could. I mean, anybody could build whatever the hell they want, but it's the network effect. How many people use it adds security, adds value in itself, and the more people that use it, the less risky it is. So that's why they came up with the Ethereum virtual machine, and that's where all financial instruments are going to be built, or they're going to be junk bonds, in my opinion, uh, because they're not going to hold that. So they're not going to hold that value. So say you have something that's not a EVM blockchain or whatever, and they create an exact copy of a smart contract that you have on this other blockchain, but it's not accessible because it's not networked. It's going to have a lower perceived value. It's not going to be as secure. So that's why all the big networks, they all will have their own blockchain token. Like Solana has a Solana token, Sui has a Sui token, etc. And they all have their own smart contracts, but they're all compatible with Ethereum virtual machine. Uh, and we'll go into that a little bit more how the smart contracts work and how to deploy them and the tokenomics and you can put you can code it to create event based or time based or uh, certain events in that contract that uh, help along with price or adoption or tokens or buying back the tokens to create scarcity or minting out more to gain more money for liquidity. So there's a lot of mechanics you can code into it that can drive price also. But price itself is very speculative, and you're really dependent upon how much adoption and people believe in that, and they're buying and selling it. The candle, like I said, it represents both buyers and sellers at the same time, and it's not until it closes that it gives you the full history of that candle. Uh, you'll see the little wicks that go up at the top. That just represents that the price was up there at once and then came back down before it closed, or came or opened. Either way, uh, red obviously is down, green is up. So, uh, but yeah, we're looking for the Clarity Act, which is really what's gonna help us a lot. It's gonna because one of the things that the Ethereum kind of created way back when was the DeFi network, which is decentralized finance, and they make loans, crypto loans. They do crypto uh, assets that you can speculate on for leverage in the liquidity markets, like hyperliquid or whatever. You can do, which hyperliquid kind of works same as the stock market, the futures. It works on the futures price, and crypto works on the futures price too. So the futures price is or the kind of sets the real price. So what is Bitcoin in the future? So then there's a market for that, believe it or not. It's called the futures market. It also sets the open interest, which is 100 people believe that the price of Bitcoin will be $100 tomorrow. They all put their money in, and that's the open interest amount of money for the real time buyers that are buying it at $75 or whatever. And so that future markets will drive the price in the future, which could be in the next second. It's a whole nother market to wager on. Most of us, we wager or buy our tokens in the real time market. And crypto is 24 hours a day. It doesn't take a break. So there's alternatively a futures market that works hand in hand with it, and it sets what's called the open interest, which is it lets the market makers gauge how much money in the future is going to come in, so that they can adjust their risk to provide liquidity to the buyers and sellers on the exchanges. Uh, it's kind of super. I mean, it took a while to understand this. Uh, at least the liquidity part of it. And the liquidity part of it is super good to understand, especially if you're short-term trading. If you understand liquidity and market makers, you can make some money if you've got the cojones to freaking take that risk. There's with the right amount of education, you could risk and de-risk quickly enough to be pretty effective. But there's going to be times that it wipes you out, and you become less tolerant to that risk. So not everybody has the same risk appetite. For me, I like certainty more than risk. So uh, and then so yeah, I think the biggest takeaway here is that there's a big, huge thing between crypto tokens and blockchains, and there's nothing magic about it, and there's nothing more money to it than the actual money that exists in the real world now, and that's the U.S. dollar. So uh, basically, I mean, when you buy a token, that token is here's your token, and then just a dollar wraps around it. Is basically what it is. So it's just a representation of the dollar and how much percentage of representation. So if your token is worth 1 cent and you wrap a dollar on it, it's going to be 1 cent until there's more value added to it by more people adding money to it, and then it starts trading and de-risked and hedged and this and that. But behind the scenes, there are a bunch of people trying to make money, just like you are. So when you put your money in and it doesn't go up, doesn't mean anything more than that someone else is making money on the way down with that product. So anywho, uh, I think this is kind of like new for me. I've not much of I understand it all. It's just that I'm probably not your best creator, but I have a firm understanding of how the underlying portion of it, how the liquidity moves, how the token's created, how it's minted, or how it comes into existence, what happens to your dollar in and out, and what are the mechanics behind what's happening. Because very similar to your bank, if everybody went to the bank to pull their money out at once, like in the great 1929 bank runs or whatever, The bank doesn't have all that money. They take your money in and they loan it. It's no different in the blockchain. So and that's the liquidity of it, is how much money is in that bank, and what are the chances of everybody pulling their money out today are not very great. You know what I mean? So if I lend it to another guy, the chances of all but one, you know what I mean? There's like probabilities, so that they called fractionalized reserves. So you put $100 in the bank, maybe there's only 10 real dollars in the bank, and they've loaned 90 out. It's no different in the crypto world as it is in the banking world. And that's one of the things, the digital structure bill, they're trying to, the banks don't want to share with crypto banks, so there's a big fight going on with that. And the stock market doesn't want to fight with Bitcoin, you know what I mean? So there's a big fight in that. There was the old school players, or you can think of it as people that used to handwrite their mails, lick a stamp on it, put it in the thing, compared fighting the same people that the stamp makers fighting email makers, eventually the email won. So right now it's the old guard and the new guard. So stock markets are transitioning into digital, blockchain, smart contract, uh, financial instruments, while resisting their old platform of, you know what I mean, the oligarchs hoarding money. So they're trying to share, and nobody wants to give up their dominance in one market. It's like the banks don't want to give up to stable coins and stable coin rewards, so they're fighting in Congress over that. They don't they don't nobody wants to share. It's like, I assume everybody's good and wants to just equally distribute to the world, but not everybody does. They want to hoard it, and it creates that K-shaped economy where the price is on top and it goes down to the middle, and then nobody has wealth over time. But there's no utopia or whatever of like everybody's equal. Like the projection for AI is that there'll be no jobs or whatever, but you won't need a job because AI will do everything. It'll create wealth and distribute wealth equally across the board, and there'll be no desire for that. So that's the utopia version of things in life. But uh, people that have a lot of money don't like letting go of that money, so they hold on to it tight. They buy lawyers, they buy organizations, they write rules that don't allow other people to come in and do it, and they gate it off to everybody else. So yeah, so that's it. I think in a nutshell. I think I'll be doing this daily for now. Uh, and I just kind of like wanted to introduce myself and just go over like some higher level stuff, and then I think from there forward, we're just gonna take this as like a course, kind of like a 101, 102, and we'll like have a topic for specifically stick to that topic for the entire episode or segment or whatever, and we'll hammer away on that concept, and then we'll move on to the next concept, and then every so often we'll recap, and we'll kind of start from the bottom and work our way up in complexities, and we'll cover both, crypto, blockchain, and regulations, and and the market, the macro, what's happening in the world, because what happens in the world is amazing if you're doing short term trading. I made an app agent that trades macro events. So it just scans the APIs for the New York Stock Exchange, New York Times, the presidential tweets, certain things that happen in the stock market, and it adds all those up in every minute of the day, and it tells me the probabilities of certain movements in asset prices. Uh, it works pretty good. Like, you'd be amazed, like I said earlier, if you just put up your candles on your exchange, whatever your market exchange, and you put the news right next to it, and when something pretty pretty substantial happens on the news while the markets are open, you'll notice that you'll see that certain things that are tied to that news are relative. Like if it was something to do with data centers and something negative came out about data centers, it just the algorithm just instantly de-risks or risks the profile, and you'll see that, oh, okay, well, if I listen to the short-term volatility of that news, you can make money on it up and down. And then there's the like news that you know that's coming or anticipated news that'll trade in a lesser fashion. But the new news when it breaks is more the macro or the narrative is more rewarding to be on the right side of that trade. And then yeah, so well, it seems like my time is up, and I will catch you guys tomorrow. Until then, take care.